presidency. We all know the Senate, our Senate majority is in peril. Let's not forget about the House, though. It could be the backstop on democracy that we need.
Mm-hmm. Well, there's a lot here, a lot of cross currents and a lot of overlap in all of these races that we're talking about here. Congressman Seth Moulton, I feel like we're dancing around this a little bit here because everybody's trying to be polite. Should Joe Biden drop out of the presidential race or not?
I don't have the answer to that right now. I've had a lot of conversations about this, candidly, and there's certainly a view that the chaos that would follow would be worse than just having a nominee that we know and that can trust. And then, of course, there's the other view that the debate was a disaster, and we just need to move on. I'm not sure exactly what the right answer is yet here, but I can tell you, we are having those serious conversations as any serious party should.
How does the Vice President Kamala Harris factor into those conversations? Is the thinking that she should be the nominee instead, or that someone else entirely who is unattached to this administration should be the one to take the helm if indeed Joe Biden makes the decision to exit?
It's a great question, because that's a debate that's happening behind the scenes right now as well. If the president were to say he's not going to run, would it automatically go to the vice president, or would there be an open contest?
Shortly expecting the results of the Fed reverse repo operation.
I'm not even sure exactly what all of the party rules are in terms of shifting delegates around and whatnot. That's certainly not my area of expertise, but that's something that would have to be sorted out, because this really is an unprecedented situation. I can't think of a time when something like this happened before. I'll tell you, one of the considerations, just to lay all the cards on the table, is that there's been great concern that the Democratic Convention in Chicago this year will be chaotic to begin with. There are a lot of protests planned. There are a lot of people who are upset with the president's policy around Israel and Gaza in particular, who probably want to disrupt the convention. And some people are saying, do we want to disrupt the convention even more? I mean, these are real serious considerations and real debates that are happening right now amongst members of Congress and other leaders in the party.
As this debate takes place in the wake of the Supreme Court ruling yesterday, Congressman, there's a lot of speculation going on, and people are kind of letting their imaginations run
78 counterparties take $443.369 billion at the Fed reverse repo operation.
Your imagination to run in a world now where a president can effectively commit a crime as long as it's considered part of his official business.
We founded this country. Our founding fathers wrote the Constitution to shed the shackles of a monarchy, to get away from a king. That's why my ancestors came here in the 1630s, to get away from the King of England. And I think what the Supreme Court has done is essentially restoring a monarchy, restoring the power of a king to the president. And so I think, just at a very visceral level, this Supreme Court ruling is about as un-American as you can get. The founding fathers must be rolling over in their graves. And I don't think we fully understand what the implications of this ruling could be for the future of our democracy. Because you're right. I mean, I don't know where it stops. If he just chooses to assassinate a political rival, is he immune from that? Oh, I'm sorry, it was an official act. If he just chooses to start a war, ignoring the will of Congress, because it's written in the Constitution that Congress is supposed to have a check on that. Does he suddenly become immune because it's viewed an official act? He could send thousands and thousands of Americans to their deaths, and we just turn a blind eye because it's an official act. I mean, it seems legally absurd and deeply, deeply un-American. So I can't describe how concerned I am.
And it falls on the week of the 4th of July, of all things. Congressman, thank you so much for being with us on Balance of Power. That is Democratic Congressman Seth Moulton of Massachusetts. We appreciate your time. Some pretty choice words there, Joe.
I never thought I'd have a conversation like that with a member of Congress.
A monarchy and a democracy, and this is the reality of the moment that we're in.
Seems to be embracing the family conversation as well.
Yeah.
When you consider what's going on inside the Biden camp. Really remarkable stuff there.
Well, and the fact that the congressman did say there he doesn't have answers at this time. Mm-hmm. It begs the question, does anyone Or are all the answers only in President Biden's own head? And ultimately, that's all that this will come down to. So on these notes now, we assemble our political panel. Rick Davis is with us, Bloomberg Politics contributor and Republican strategist, alongside today Lincoln Mitchell, political analyst and lecturer at the School of International and Public Affairs at Columbia University. Rick, if you could just weigh in first on what we just heard from the congressman there about the fact that he very frankly doesn't know what to think about whether Joe Biden should quit this race, whether the vice president should be the one to helm the ticket in his stead. How long do Democrats really have to come up with answers here?
Well, I think he betrays a series of conversations that are obviously going on inside the Democratic Party right now that probably are a lot more substantive than we've been giving them credit for. It sounds like they've been having specific conversations around whether or not Joe Biden should be the nominee of the party or not. And you now see why there's such a scramble by the White House and the campaign to try and get ahead of this, because I think that train is already leaving the station. So I was very impressed by the fact that he was so forthcoming with this idea that it's not a given that Joe Biden's at the top of the ticket at the end of the day, going into the November elections. And so it'll be interesting because certainly there are a number of Democrats running in key targeted districts that are very vulnerable in Republican cycles to losing their seats. And I'm sure those like Moulton are the ones having those conversations. I also think that this point he's making about a big generational change in American politics is very good foresight. Both Biden and Trump represent the end of an era. They are not the future of politics in America. They are the past. And the only thing that we're waiting for is this election cycle to actually bury the memories of Biden and Trump as party leaders. And I think people like Seth Moulton ought to stick around. I hope they don't get so fed up with this process that they quit, because you need voices like that in the future.
Pretty remarkable conversation we just had, Lincoln. I'll let you weigh in as you choose to here, because we just heard a lot from the congressman. What the heck is going on inside the party?
Well, I appreciate the congressman being so frank, and his willingness to be so frank tells you how serious these discussions are. I spent last week in Georgia, the country in the former Soviet Union, not the American state. And when you spend time in a country that was once part of a country that it has collapsed, you begin to think about the United States a little differently. Biden may well be to American democracy, and I'm dating myself here, what Leonid Brezhnev was to Soviet communism. The old guy who, at the end of the day, just couldn't hold it together. And that, of course, is very concerning, but it's hard not to see that. And Georgian friends and colleagues told that to me the day after the debate. They said it was Brezhnev-esque to see him up there. I want to make an important point about Kamala Harris, and this is extremely important. The kind of insider chuckle, it can't be Kamala, is we believe that, people believe that because Joe Biden wants us to believe that. If Kamala Harris had been popular throughout the Biden presidency, he would have been out of this race a year ago, and he knew that. He needed Harris to be unpopular. And this is something that everyone overlooks. If Biden had, say, for example, given Harris responsibility for the vaccines instead of the border, and had those visible weekly lunches that every Democratic president has with their vice president, and gotten those stories out there about how she was the last advisor in the room, even if she wasn't, her popularity would be much higher now, and the Democratic Party would be in better shape. So while it's easy to kind of see Joe Biden as this doddering old guy who's just losing it, Biden has always been a sharp political mind. That's how he got to be president of the United States, and he overplayed his hand a little bit, because if Harris had been popular, we wouldn't be having this discussion. And this leads me to this talk about, and I know that the congressman wasn't clear on the how the Democratic primary convention will work if Biden's not on the ticket. I am pretty clear about that. And I want to stress two things here. One, if you're saying, if Democrats are out there saying, well, it can't be Biden or Harris either, then you're just kind of being picky. If it's not Biden, the cost of going over Harris in a party where it's essential to win back African-American votes is too high. And you could land on a worse candidate. Imagine that Gavin Newsom, the golden boy from California, who last won, and I'm not picking on Gavin, but just to make a point, who last won a competitive election in 2003. And he won it against a challenger from the left for mayor of San Francisco. Imagine he's the nominee. And the day after, what the media is filled with is not Gavin Newsom on the issues or his campaign strategy.
Right.
It's photos with him with the 19-year-old girlfriend he had when he was mayor of San Francisco. And the day after that, it's the stories about him having an affair with the chief of staff's wife. And the day after that, it's about how the Gettys put him in business. A lot of these candidates who everyone seems to like now have not been through this. Harris has. So my sense there is that we can say we need to get rid of Biden, but we have to recognize it's very likely going to be Harris. The other point is this. 10 or so, rough number, one quick thing, percent of the delegates are uncommitted. And they will put a candidate on the ballot who wants to cut all aid to Israel. And there is nothing the Republicans would like more than a Democratic candidate for president, if it's not the nominee, talking about we need to cut all aid for Israel while 10% of the crowd is chanting from the river to the sea. And I will take doddering Grandpa Joe over those odds every time.
Lincoln Mitchell, Rick Davis, we're out of time for our panel, and thank you for the insights following our conversation with Congressman Seth Moulton. I want to bring you to the North Lawn of the White House today, where there is some important business being had. We're talking about, obviously, a lot of politics, but let's deal with policy today at the White House. It's directed at severe weather, Kayleigh. President Biden giving remarks on extreme weather as we follow this Hurricane Beryl toward Jamaica and what could be a very destructive storm, eventually touching us here in the U.S. And I'm glad to say that we're joined by Amos Hochstein, Senior Advisor to the President on Energy and Investment. He's with us from a sunny and warm North Lawn. Amos, welcome back to Bloomberg TV and Radio. It's great to see you. Can we just start with the matter at hand here and the potential threat from this storm? Is the Strategic Petroleum Reserve, for instance, safe and sound? Is our infrastructure protected along the Gulf Coast?
Well, first, Joe and Kayleigh, thank you for having me. It's good to be back here. Yeah, look, this is exactly why we have planning all year long to make sure that we are ready for moments like this. We have a hurricane that is tragically affecting people and lives in the Caribbean, Mexico, and could be coming towards the Gulf of Mexico and in the United States. And making sure that we have a response to it, both to support people and communities, as well as making sure that we have the ability to, if we have to do something to address shortages in energy, we're ready, prepared to do that. And so the president has ordered us a long time ago to make sure we are prepared. And I believe that we are. The SPR has enough in it to address concerns of weather concerns or other geopolitical issues. And there are other areas and tools that we have at our disposal that we're always willing to do. Look, just today, we're releasing 1 million barrels of gasoline from the Northeast Reserve into the market, which should help bring additional capacity into the market ahead of the storm, and most importantly, ahead of July 4th, when so many Americans get in their cars and RVs and are to travel across the country at record numbers.
Well, as we consider the SPR and the availability of the contents of it for emergencies, of course, it is not as full as it once was after it was tapped earlier in this administration when we saw gas prices so high. Almost obviously, gas prices are not at those levels now. The average, according to AAA, is about $3.50 a gallon across the U.S. How high would gas prices need to get for the president to consider tapping the SPR again exactly for that purpose, to get those prices down?
Well, I think that, as you mentioned, when the advent of the Russian war in Ukraine, and then as that war continued, we had soaring oil prices in the United States and around the world, and gas prices soared to $5 a gallon, and that's when President Biden ordered that historic release from the SPR of 180 million barrels over a period of 6 months. Since then, we've seen two things happen. One, the private sector that was just reeling and coming out of a very bad era for during COVID of production, has gone to record production in the United States. We are producing more oil today in the United States than at any time any country has in history, and we are near those records for natural gas production as well. And so that's one thing that happened. We have more supply on the market today. The second is that we've been repurchasing back oil into the strategic reserve. Roughly about 40 million barrels have been purchased back into the reserve and replenished. And as importantly, we canceled the congressional mandated sales out of the SPR that were supposed to come into effect over the last several months. So we're in good shape. We have enough capacity in the SPR.
According to a statement, U.S. Treasury Secretary Yellen is to testify on July 9th before the House Financial Services Committee on the state of the international financial system.
It's about the overall environment of the market, and do we need to put liquidity of oil into the market at any given moment, whether it's geopolitical pressures or weather or other issues that are affecting the U.S. economy.
Amos, I know your time is tight, but we have to ask you as well about the potential for shock based on geopolitics in the Middle East.
Yeah.
I wonder your concern about ready supplies. You mentioned this release of 1 million barrels of gasoline from the Northeast gasoline supply reserve. But is our energy infrastructure, is the global market able to absorb a new front in the war with Israel? If Israel were to open a front to the north with Hezbollah, what would happen to the price of oil?
Well, first, I think we're trying to do a couple of things. One is to make sure, try as hard as we can. The president's spending an enormous amount of time every day on trying to get us to a ceasefire that brings hostages home and practically ends the war in Gaza. Second, to keep the escalation that we have seen over the last several weeks on the border between, on the blue line, the area between Israel and Lebanon. We saw this has been going on for 8 months. We saw the escalation really ramp up over the month of May and early June. We've seen that come down a bit, which is a good thing. And we have told both sides, we're working with both sides. I've spoken to them. I was in Lebanon and Israel last week, and we are going to try to continue to work as hard as we can to prevent a further escalation. That war is, any kind of escalation would have, it's not just about markets, it would have significant ramifications for thousands, hundreds of thousands, if not millions of lives. And we believe that it is possible to get to a resolution of that and to end that conflict so that Israelis can go back to their homes securely, that Lebanese can go back to their homes and farms in respectively on the Lebanese side, and that we can end this goal. However, we are preparing for every scenario. And the president has been adamant that while we try to prevent war, we are prepared to handle the consequences, even the ones that will affect the economy. The reason the Northeast Reserve that you mentioned is important, in the summer, we do import gasoline from the global market in the Northeast. So this does have a pretty significant impact on what we're trying to do and make sure that people's effects for their budgets as they travel on July 4th, that prices are as low as they can be.
All right, Amos, thank you so much for joining us today from the North Lawn of the White House. That's Amos Hochstein, Senior Advisor to the President for Energy and Investment, running through a few issues that President Biden, for all of the talk in recent days about his ability to serve as President of the United States through the remainder of this term, yet let alone another 4 years, is still focused on policy, whether it be foreign policy in the Middle East or policy here at home as we consider gas prices and the toll they may have taken on his popularity as president. Let's bring in now for a final note Rick Davis, who of course is Bloomberg Politics contributor. Rick, we have spent so much time in the last several days talking about Joe Biden's age and acuity, but even before the debate, he already was an unpopular president, suffering in part because on the left there was upset over his Israel policy, in the middle there was upset about prices and what has happened to them under his administration. Does the age question therefore just make those other battles he was already fighting potentially unsurmountable?
Yeah, I think that the age issue contributes to, can he actually overcome all these dramatic issues like inflation, foreign wars? And so it's a competency issue. And I think we've seen in the polling, certainly post-debate, that he's taken a very big hit on whether or not he is got the competency to be president of the United States, to make these decisions, to move the country forward. So I think that's the new front that the campaign cannot ignore. They have to be able to accomplish some level of confidence by the American people in Joe Biden's competency. Otherwise, this election is going to be based on the fact that they don't see him as prepared to continue to be president in another term.
The new front in the campaign with Rick Davis, Bloomberg Politics contributor. Rick, thank you. We'll see you a little bit later on, and happy 4th of July in advance. I'm Joe Matthew alongside Kaylee Lyons in Washington. Let's get up to date on world and national news now. Amy Morris has that in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe, and let's recap a lot of what you guys have already been talking about this afternoon. For example, Democratic Representative Lloyd Doggett of Texas is indeed the first in his party to publicly call for President Biden to step down as the Democratic nominee for president. He released a statement saying that Biden should make the painful and difficult decision to withdraw. This, of course, based on his performance at the debate on Thursday. Former President Donald Trump looking to have his New York hush money case thrown out. Hours after the Supreme Court issued its landmark ruling about presidential immunity, Trump's lawyers filed a letter with the judge looking to set aside the recent guilty verdict. Trump was to be sentenced next week, but that, of course, now is expected to be delayed. Rudolph Giuliani, the former New York City mayor, federal prosecutor, and legal advisor to Donald Trump, has been disbarred in the state of New York. This happened earlier today. A court found he repeatedly made false statements about Donald Trump's 2020 election loss. That decision was handed down by a New York appeals court in Manhattan. And President Biden is unveiling rules now to protect millions of workers from extreme heat. If these rules are finalized, they will establish the nation's first ever federal safety standard for excessive heat exposure in the workplace and protect as many as 36 million indoor and outdoor workers. It would also require employers to establish heat safety coordinators, undergo extreme heat safety training, and create emergency heat response plans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? Yeah. I mean, like, what's that about?
We're not forcing everybody to, be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on
that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities head-on. It's very important to have a diverse team because we have a very diverse landscape of customers.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Good morning from our world headquarters in New York. I'm Menace Crennick.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
The job market is quite strong. There's no major job losses. The economy is still chugging along.
This Friday, Bloomberg will bring you crucial data and expert analysis at terminal speed.
We have a labor market that is not inflationary.
Perhaps some cooling is in front of us.
We're now starting to move into the more normal stage.
There's a lot of things under the hood here.
The June Jobs Report, Friday on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline right off the Bloomberg Professional Service. Eli Lilly's Alzheimer's treatment has been cleared in the U.S. as the second drug to slow progression of the mind-robbing disease that afflicts 6 million Americans. Eli Lilly shares, they are trading lower right now. We got Lilly down by 1.1%. We are now looking at an up-day light volume. The Dow, the S&P, NASDAQ, yes, the NASDAQ 100 index, all in the green. S&P up 14 right now to 54.89. That is a gain of 0.3%. The Dow just about flat on the day, still higher, up by 8 points, while NASDAQ is up an even 100, now up by 0.6%. 10-year yield 4.45%, with the 2-year that's yielding 4.73%. Gold down 0.4%, 23.23 the ounce. And West Texas Intermediate crude down 0.2%, 83.21 a barrel. Tesla shares surging by 7.8%. It did report its second consecutive drop in quarterly deliveries, though CEO Elon Musk is taking measures to stem the decline. Again, Tesla up by 7.8%. Recapping stocks higher. S&P up 14, a gain of 0.3%. Balance of power continues now in Washington. Back we go once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York, thank you so much. And here in Washington, myself and Joe Matthew have had our eyes on what was coming up in New York next week. It was supposed to be on July 11th, the sentencing of former President Donald Trump, who, of course, has been convicted of 34 felony counts of falsifying business records. Then the Supreme Court threw a bit of a wrench in that plan yesterday, ruling in part that Donald Trump has at least presumptive immunity from official acts taken while in office. And now Trump and his defense team contend that that means the New York case should get thrown out. The prosecution, Joe, today, Alvin Bragg, the district attorney, says it is not opposed to allowing that motion to move forward. They say they will be prepared to respond by July 24th, and that effectively means this sentencing might not be happening until August.
Yeah, so cancel your plans for the 11th. We will not be talking about a sentencing. We'll be packing our bags for the Republican National Convention.
Yes.
Pretty remarkable. As we bring in Elizabeth Wydra, this day after the Supreme Court ruled, and we're already feeling the ripple effects, as Kaylee just said, legally and certainly politically. Elizabeth is Constitutional Accountability Center president and Supreme Court litigator, has been there before and joins us once again now. Elizabeth, it's great to have you back here. A lot of folks are using their imaginations on what this means for the presidency more immediately, and I'd love for you to weigh in on that as we talk this out here on Bloomberg TV and radio. More immediately, we're seeing the impact of this ruling even on a state level case like this in New York. Do you think Donald Trump will be sentenced in New York before the election?
You know, this case, honestly, it has in part been extraordinary for many reasons, but the delay that it has caused in the criminal cases against Donald Trump continues to have its effect. So with respect to his January 6th trial that this appeal came out of, that case obviously has been delayed for months and months and is unlikely to go forward before the presidential election. And then as we're seeing in the sentencing in the New York State case, we're going to see a delay there as well, even after a jury of former President Trump's peers found him guilty on 34 felony counts. And that's because the Supreme Court's immunity ruling yesterday from this conservative supermajority didn't just grant really breathtakingly sweeping absolute immunity for core official actions and then presumed immunity for official actions sort of within the outer perimeter of what could count as an official action. They also said that if you are being prosecuted for private conduct for which you don't have immunity, if there's evidence that's relevant to that private conduct, so this New York State fraud case is private conduct, if there's evidence that comes out of an official context, so like communicating with your aides, et cetera, that can't even be presented in the aid of those charges that can be brought even under this immunity ruling. So that prevents certain evidence from being presented. And that's what Trump's motion in the New York courts will focus on, that without the evidence that relates to his official conduct, his conversations with aides, his communications with the public while he was in office, without that evidence, you can't support the criminal charges based on his private conduct. So the conservative Supreme Court majority's ruling on the immunity case is so sweeping. We're already seeing its effects. And as the dissents noted, the potential dangers for our democracy are real and are frankly terrifying.
Well, and that's something we were speaking with Elizabeth, Democratic Congressman Seth Moulton about earlier this hour. He described how his ancestors came to the colonies originally to escape a tyrannical king, the British monarchy, and that in some ways he saw the Supreme Court as taking a step back toward that direction on this week in which we're celebrating the declaration of the independence from Great Britain. To what extent is that actually true and not hyperbole, Elizabeth? Has this effectively made the president more like a king, or is the court reinforcing what was already constitutionally understood to be true?
So unfortunately, I don't think it's hyperbole. You know, one of the kind of principles of the founding of our nation was that no one would be a king in this country. Even the most powerful executive elected officer, the President of the United States, would in many ways be as an equal with the people who elected them. And the idea that no one is above the law is so central to that idea of equal justice and equal citizenship and democracy that this ruling really works a shift in the very understanding of the office of the presidency under the American Constitution. So before, there were certainly some understandings of ways in which the president would not be the same as, you and me before the courts. There's generally an understanding that you couldn't criminally indict a sitting president, although you could after they left the office. You know, there were all these different ways in which the president's ability to act was protected, but never was there ever contemplated this absolute immunity in these core functions and the outer perimeter of official conduct. In fact, it was very clear at the time of the drafting of the Constitution that the framers of our Constitution were well aware of how to write in immunities when they wanted it. They knew that some colonial era governors had some criminal immunity, and they specifically chose not to include that because they wanted the president to be like their fellow citizens, subject to American criminal laws if they violate the law, because they're a person just like the rest of us. We don't have hereditary lines. We don't have, divine right of kings. And this ruling really upends that understanding. And it is very dangerous because as the saying goes, absolute power corrupts absolutely. And it's perhaps even more important for the president to be subject to criminal liability when they act with their utmost power, because that's when they can really abuse that power if they so choose. And so what the court has done is really given a dangerous blank check to future presidents, well, I guess the current president as well, to presidents going forward from yesterday, to really act with impunity. And some of the not hyperbolic, unfortunately, examples from the dissents were, okay, so it's a core executive function to be able to remove the president to be able to remove his attorney general. Well, what if he decides to remove him by poisoning him to death? Then he can't be criminally prosecuted for that. That is just crazy, not the technical legal term, but legally insupportable.
Well, it sounds like you're letting your imagination go there too, Elizabeth. Tim O'Brien writing for Bloomberg Opinion that this ruling invites presidents to commit crimes. And with that in mind, what does the court think about this idea of sentencing a president, even though it's a state court? If Donald Trump is sentenced and wins election, is he still going to be meeting with a probation officer while he's at the White House or wearing an ankle bracelet?
Well, the New York case is interesting because it is a state proceeding, and in our federalist system, we have different systems of justice for the federal criminal docket and the state docket. So, the January 6th case, it's very important that it try to occur before the election because, again, it's a case brought by the DOJ. And so if Trump were elected, he could simply order his DOJ to drop the case against him. The New York case is different because technically, the president does not have authority over the New York state justice system. But, I think at the very least, the conservative Supreme Court's immunity decision is going to delay that case to the point that he might not be sentenced before the presidential election. And then, of course, you have all these additional layers of how do you, if Trump were to win the election, how do you deal with potential sentencing? We just have never been there before. It's unprecedented, like so many things we're talking about today.
Well, we focused so much of the conversation over the course of the last 24 hours and change, Elizabeth, on what Donald Trump could do if he does indeed win in November. But we have a president in the meantime, and President Biden did weigh in on this decision from the Supreme Court yesterday. Just take a listen to what he said, and then I have a question for you.
I know I will respect the limits of the presidential powers I have for 3.5 years. But any president, including Donald Trump, will now be free to ignore the law. I concur with Justice Sotomayor's dissent today. Here's what she said. She said, in every use of official power, the president is now a king above the law. With fear for our democracy, I dissent. End of quote. So should the American people dissent. I dissent.
Elizabeth, he began that sentence with, I know I will respect the limits of the presidential powers I have for 3.5 years. But given what the court ruled yesterday, could Joe Biden theoretically act against Donald Trump as a political opponent without fear of prosecution if he was doing so in an official capacity? I mean, what power has this given him while he is still president, at least for the next 6 months?
Yes, I think if we're talking purely legally, based on the legal standard that was articulated by the majority in the Supreme Court in their decision, yes, I do think he could take all sorts of actions against Donald Trump as a political rival. One of the hypotheticals in the court was, could a president using his military for official function order Navy SEAL team to assassinate a political rival? And I think they would be immune from criminal prosecution. As wild as it seems to articulate those words, I think they would be immune from criminal prosecution based on the conservative Supreme Court's ruling yesterday. Now, of course, President Biden says, I will respect the limits that we have understood to be on the president's power. But the whole point of drafting the Constitution the way it was an understanding that we were never going to have a government of angels. We were going to have a government of human beings who are flawed. And we didn't want to depend on people being good, honest people and not being willing to act in their own selfish best interests and perhaps for evil purposes. And so the fact that the Supreme Court is hoping that, I guess, the American people will not elect someone who would act in that way to the presidency going forward, or that a person would themselves decide to hold back and not use the terrible authority that they've now been given by the Supreme Court ruling, that's just not the way the Constitution was supposed to work. So, this ruling is really very ahistorical, from a conservative court that claims to be bound by the Constitution's text and history. The founders of the Constitution would be aghast at this ruling. And it really has no basis other than in the conservative supermajority's views about what a president needs in order to take, as they said, bold action. But I would be far more concerned about the structure of American democracy and the need to make sure that no one is above the law. That's not reflected in the ruling that we saw from the majority yesterday on the court.
Well, I'm glad we could spend some time talking about it. Elizabeth Wydra has been great with us as long as this case has been rolling, and it's great to have you back. President, Constitutional Accountability Center, Elizabeth Wydra, thank you for the time here on Bloomberg TV and radio. This day after the ruling, I'm Joe Matthew alongside Kaylee Lines in Washington. Time to hand the baton to New York. Tim Stenovic standing by with Bloomberg Business Week. What's coming up, Tim?
Hey, we're doing a deep dive on everything when it comes to eco and rates, given what we heard from Jay Powell a little earlier in the day, live from Sintra, Portugal. So expect a great roundtable on that. In addition, Tesla shares are surging on delivery numbers that were, well, better than feared. We got Ed Ludlow joining us a little later in the program as well.
All right, a lot coming up on Bloomberg Business Week. Looking forward to it. Tim Stenovic joined today by Katie Greifeld, I believe.
Hey,
and of course, Joe and I will be back at 5 p.m. Eastern Time for the late edition of Balance of Power.
Happy 4th to both of you guys in advance. We'll miss you. And as Kaylee mentioned, back at 5 with the late edition of Balance of Power. A lot more to talk about, a new wrinkle in Donald Trump's legal saga. A lot more straight ahead on Bloomberg TV and radio.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week. I'm Tim Stenivek. Carol Masser is off on assignment for the 2024 Boston Pops Fireworks Spectacular. Check that one out on the 4th of July. We got with us Bloomberg TV anchor Katie Greifeld here in the studio. Hey, Katie.
Hello, Tim. How are you?
I'm doing pretty well. You did such a good job yesterday that we allowed you to come back for day 2.
That is absolutely what happened.
Yeah.
I had to beg, but here I am.
Here you are, and what a day for you to join us. Equities mixed, bonds rising, traders looking at prospects for Fed rate cuts after Jay Powell cited signals that the U.S. is back on a disinflationary path. We got more on that in just a few minutes. Also still ahead on that, JOLTS unexpectedly increased from a 3-year low. It's an encouraging sign. We're going to talk about what data the Fed still needs to give it the confidence to cut.
And Tesla shares, they touched their highest level since January, and as well the longest winning streak in close to a year, even though we actually saw sales fall from a year ago. We'll bring you what you need to know.
Also, upflation, it is the new shrinkflation, how companies are trying to boost profits in the personal care industry. Dina Shanker joining us on that. Big take.
And shares of Eli Lilly and Novo Nordisk slipping today. That's after President Biden called on them to lower prices of their blockbuster weight loss drugs. But also in the last hour, you had Eli Lilly winning FDA approval for its new drug to slow Alzheimer's. We'll bring you the latest.
All that and more over the next hour. First up, a tech of the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much, Tim and Katie. We are higher across the board here with the Dow, the S&P, NASDAQ. They're all in the green, right to the numbers. S&P, by the way, at 54.94, pushing higher by 19 points right now. The S&P gaining 0.3%. Dow Industrials up 50. That is an advance of 0.1%. NASDAQ now higher by 115 points. Could see another record close there, up 0.6%. The NASDAQ composite, by the way, 17,995. 10-year 4.44%. The 2-year 4.73%. Gold down $6 the ounce to $23.24, down 0.3%. And West Texas Intermediate crude down 0.2%, 83.21. We're going to be talking about Tesla a lot today. Tesla shares, they are surging up 8.4%. Tesla, though, did report its second consecutive drop in quarterly deliveries, though CEO Elon Musk did take measures to stem the decline. Again, Tesla right now up 8.5%. Recapping, S&P up 19 to 54.94, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg.
According to an ABC statement, Biden is to give an interview to ABC News, with the first clip airing on Friday.
Jay Powell said the latest economic data suggests inflation is getting back on a downward path, but emphasized officials need more evidence before lowering rates. Powell declined to give any specific guidance on the timing of that first rate reduction, though he did acknowledge that the Fed has made, quote, quite a bit of progress in reducing inflation. The Fed chief added that he'd like to see that progress continue. He spoke during a panel Tuesday at the European Central Bank Forum on Central Banking in Sintra, Portugal. Here's a little bit of what he had to say.
We do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings. You can see the labor market is cooling off, appropriately so, and we're watching it very carefully.
That was Jay Powell from Sintra, Portugal, a little earlier in the day. Yields dropped on most maturities, despite data showing job openings unexpectedly rose, interrupting a trend that underscored a slowdown in labor seen as key for Fed easing. We've got a great roundtable on all things when it comes to the economy and to rates. So let's get to the interview. Stuart Paul, Bloomberg Economics U.S. economist, is here in our Bloomberg studio. Liz McCormick is Bloomberg News chief correspondent for global macro markets. She joins us from New Jersey. Stuart, I want to start with you and just go back to what we heard from Jay Powell a little earlier in the day. Anything new from the Fed chair when it comes to how he and the Federal Reserve are thinking about rate reductions moving forward?
I think that there were three important points that Powell really made during his time on the panel with ECB President Lagarde. The first is that he's viewing the balance of risks as essentially evenly weighted. So the risk of inflation rising further is about the same as the risk of the unemployment rate rising further. Second is that, yes, we've had some promising news on the inflation front, particularly the start of the second quarter after a very bad first quarter for the Fed. But he does not expect inflation to materially slow. The rest of the last leg of inflation, the last mile to that 2% inflation target, is going to be a long one, and he acknowledged that that's due in part to some sticky services categories. And I think that the third and maybe the most important thing that he acknowledged, and this is a little bit wonky, Tim, but I think you'll appreciate it, as will you, Katie, that much of the decline in labor demand that we've seen has come from declining job openings. That's really encapsulated the dissipating demand for labor. Now we're getting to the point where it might be that declining demand for labor is not going to show up in job openings. It's going to start showing up in unemployment and in headcount reductions. And we typically describe the relationship between vacancies and the unemployment rate as the beverage curve. He specifically noted that we're at the point in the beverage curve where we might start to see the level of unemployment rising a bit more rapidly than we've seen in the past several quarters.
Yeah, that was absolutely one of the things that he names checked. He had some jokes that he made as well, which I thought were kind of funny. When asked about R-Star, for example, he said, can we please talk about trade policy? But Liz, I mean, wrapping it all together, it seems like the message hasn't changed too much, that this is a Fed that would like to cut. They don't have the data that would allow them to cut at this point, but they would certainly like to. And when you think about what that means for bond investors, I mean, how do you put that together into your allocations when you look across the curve?
Yeah, I think that's the message. And that's, investors know, like you said, they want to cut. They seem to be signaling, aside from, the dot plot we got, which was like 1, that they're going to move to lower rates. So I think that was enough today to take some of the heat off the bond market, as we came back after the debate last week. There was a lot of focus on the fiscal policy, yields going up, this curve steepening, so long rates went up more. And I think today was a little bit of a breather because he did kind of lean down, like Stuart laid out, all those factors that, they think the disinflationary trend is going, although, they need some more data. And like I saw a lot of notes, and I think that kind of nailed it, like, hey, September's in play, as far as the Fed cut. So that left, I think it's a little under 70% chance that we get a cut in September. We're still priced for just about 2 this year. So I think it kind of gave the bond investors a little reprieve in this, shortened week. We have a short day tomorrow and, of course, July 4th. So I just think it wasn't a major move, but just enough to send yields a little bit lower.
Yeah, and of course, we're getting more data this week, and what is a pretty boring week, but Friday will, of course, all eyes be on the jobs report.
Boring.
It's a little bit boring. I think it's okay to be honest with our audience. That there's just...
We got jobs on Friday.
No, we do. I'll be tuned
Jolts
in.
Today.
We do. We did
Powell.
get Jolts today.
We're on radio and TV
All right, you're
right now?
selling it. You're selling it as a financial news anchor should. But Stuart, I want to go back to actually something that Powell said today, which I thought was super interesting. When asked what keeps him up at night, he didn't say inflation reaccelerating. He didn't say a deterioration in the labor market. He said cybersecurity, which I wasn't expecting him to say.
Well, it's interesting. So he said, I usually say cyber, or I always say cyber. My stock answer is really cyber. And Christine Lagarde agreed. And yes, for somebody who's overseeing the banking system and who's part of this major regulatory agency, it makes sense. Cyber is scary. But then he sort of took a little bit of a step back and he said, the other thing that really keeps me up at night is managing the balance of risks and doing our jobs right. And I think that he's right. The real risk to the economy is if the Fed were to become complacent and think that we're truly on a sustainable path to 2% and cut too early, or if they were to be too confident in economic momentum and keep their foot on the brake for too long. I think that he sort of showed his hand a little bit, that the thing that really keeps him up at night is the possibility of making a mistake.
Yeah, I mean, you think about some of the figures we talk about all the time, Powell included. You know that you're going to be in the history books in some form.
Yeah, I mean, there's already books about him.
Yeah, that's right. A former colleague wrote one, actually.
No question.
Yeah.
Liz, what do you make of that? I mean, he's only human, and I think it makes sense for a Fed chair to be concerned about making a policy mistake. But what was the message that you think that sent?
Yeah, I think that was an important thing because I think that also helped investors because, and he said, the labor market is, still good labor market, but showing some signs of slowing. And I think that what you just laid out is they seem to really want the soft landing. They know inflation going to, having your legacy be that you didn't bring down inflation is bad. But I clearly think he doesn't want to crush the economy if he can, so he's trying to see this dual mandate and not fail on either side. So I think that the bond investors, because like I said, Friday, boring or not, we have jobs. So maybe we'll see a soft jobs number, and that would add to that scenario. Though I think Powell said when asked by the moderator, where's the unemployment rate going to be in about a year? He said kind of not too far from where it is now. So I think that's his hope, that he can pull this off without kind of crushing the economy. But like Stuart said, he's staying up at night worrying about that a little bit, as he should. That's his job, right?
Absolutely. I would hope that, he's worried about that. But it's July 2nd. Liz, we're 2 days away from July 4th, which I'm very excited about. But we're just a couple months away from the U.S. election that's coming in November. And it's interesting. I mean, in the aftermath of last week's debate, you've seen a lot of Wall Street come out and basically put together a Trump trade for the bond market. I mean, what is the sell side saying so far about how to handle that?
Yeah, well, they're saying with the way the debate went that the odds are increased that maybe Trump wins and we could even have a Republican sweep, maybe. And that kind of leans towards maybe if Trump's immigration policies to reduce immigration gets through, that would be a headwind to the economy, and that tariffs and other things would be inflationary. So that's kind of the trade, the inflation trade, bet on a steeper yield curve. I mean, we'll see. Like someone has said, we're still far away. We don't know. Of course, we don't know how Congress will go. That will matter a lot because gridlock is usually good for investors. But I think you couldn't come out of the debate and the Supreme Court result yesterday and not feel like maybe you have to factor in some risk that, Trump does win again. And so that's what kind of, like you said, all the Wall Street notes, many, not all, but we're focused on that for sure.
Well, Stuart, how are you factoring in that when it comes to how you're thinking at Bloomberg Economics, not just about the economy from now until November, but potential changes that we could see under a second Trump term?
So there are very few differences that I actually see in terms of the sustainability of the U.S. fiscal trajectory under either a second Biden term or under a Trump administration. Yes, you could expect more tax cuts or an increased probability of tax cuts during a Trump administration. But in any event, U.S. fiscal policy is on an unsustainable trajectory, and Chairman Powell has acknowledged as much. And the question is whether or not the Fed will find itself in a position where it's having to account for bond issuance and having to monetize the debt in perpetuity. It's not a position that they want to find themselves in. They're pushing for fiscal reform, but it's not in their purview. And when it comes to the elections in November, I think that Powell should be reasonably concerned under either election outcome that there's going to be little done to put the U.S. on more sustainable fiscal footing.
We unfortunately have to leave it there, but a big thank you to both of you for joining us. Stuart Paul here in our Bloomberg studio. He's Bloomberg Economics U.S. economist. Liz McCormick, Bloomberg News chief correspondent for global macro markets. And now to one stock that is certainly surging today, Tesla, up 8.6% for a sixth consecutive day. It's the longest winning streak in about a year. This after the company reported deliveries for the second quarter that beat the average analyst estimate. Ed Ludlow's with us now. He's co-host of Bloomberg Technology on Bloomberg TV. He joins us from our San Francisco bureau. So Ed, better than feared, is that the way to describe the decline in sales year over year?
Yeah, I mean, there's a mixed response. The stock's up significantly, I think on track for its biggest jump since April, but I would say there's a range of response. There's those that look at this and say, well, it is a back-to-back sequential decline, first quarter, second quarter, in terms of a drop year on year in deliveries. So it could signal that things are not great, but they're improving from where they were in the first 3 months of the year. Or you can kind of look at it the other way, which is it's still a drop in deliveries year on year. And either you believe that delivering electric vehicles is the mainstay of Tesla's business, or you look at elsewhere and think, you say it's just not where Tesla's headed, and so we don't have that much concern about it.
Ed, I've been waiting all day to talk to you about this.
Hi.
Hello, Ed. So let's talk about some comments that we got from Jessica Caldwell. I know that you're familiar with her as well from Evans.com.
She's awesome.
She was basically talking about Tesla's limited lineup here. It has a pretty narrow lineup as compared to most car makers. And she said, quote, "We've seen the automaker exhaust its bag of tricks by lowering prices and increasing incentives to spur demand without much success in the U.S. market." So these numbers, they were better than feared, but where does Tesla go from here?
So Jessica Caldwell is an auto analyst that looks through the consumer lens, right? She looks at the marketplace for consumer cars. And so that is an opinion that's shared by many. You know, the Model Y at this point is several years old. They have a limited range of cars. Let's say you compare with a Volkswagen or a Toyota. Think about all of the different models that they offer and actually subplates, you know, both at the luxury end and at the base end. Tesla just doesn't do that, so that's a cause for concern. The other problem is one that Elon Musk has already talked about, that there's a lot of evidence that pure play battery electric cars are battling for the attention of consumers against hybrids. And many consumers right now, where things are difficult, interest rates super high, and many are still not convinced about the utility of an electric vehicle in their lifestyle, a hybrid's a great option. That's something Elon Musk has talked about. So that may be reflected in these numbers as well.
So, Ed, if hybrids are indeed the transitional vehicle that gets us, and I'm talking about us as a globe, to a world of EVs eventually, how long is that transition? I mean, I actually know folks who had completely electric vehicles who traded them in for hybrids.
Yeah, it's really tricky. I would say like most estimates, including like Bloomberg New Energy Finance, right, which is our in-house research arm that looks at the market for battery electric vehicles, among other things, still see a massive jump from where we are today, 2024, to the proportion of vehicles on the roads that are battery electric in 2030 and 2040. We're still heading in that direction. The market for battery electric is not shrinking, it's growing at a decelerated rate. But, you know, you think about the average American family, it's the best use case to think of. Tesla is offering financing on a brand new Tesla vehicle at 2%, which is very competitive. But for many, the product itself just doesn't work. Like if you have several kids, the only 3-row option out there right now is the Rivian R1S, which isn't selling brilliantly itself. It all comes down to household economics and what's available on the market. And hybrids have had a real resurgence in the first 6 months of this year.
Ed, we have like a minute left together, and
Sure.
I need to ask you about the Cybertruck. I actually saw one on the highway over the weekend, and I actually slowed down just so I could stay close to it for a little bit longer and just get a really good look. What's going on with the Cybertruck? When are we going to get numbers around that?
So we have some indicative numbers because of the recalls. You know, the Cybertruck has had some physical issues. So the regulators tell us, at least in the US, like this is how many we recalled. So you can kind of do the math on how many have been delivered, and the answer is not that many. In many ways, it's a niche product. You know, the Tesla bulls would say, hey, you guys are wrong. The lineup's not stale. They just introduced Cybertruck. Look how wacky it is. But for many, it doesn't resonate with the average buyer of any car, let alone
that's fair to say.
I think it weighs about 1 million pounds.
Yeah.
Yeah, so, but it's a fantastic vehicle. I actually yet to drive it. You know, I've been in close proximity, but I think that's the question, that it, for now, it's a niche, low-volume product. Hence why Tesla doesn't break it out as its own category.
All right, why don't I either go to you or you come over here and we'll test drive a Cybertruck? That sounds so
Let's do it.
fun. Yeah.
Bosses, if you're listening, it's a good idea.
Hannah Elliott drove one. She loved it. It was in Bloomberg Pursuits a few months ago. She loved it.
She's really cool.
She's awesome. Hey, also awesome, Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV, joining us from San Francisco. Up next, one of the most read stories on the Bloomberg terminal. Today's big take, upflation, the new retail tactic pushing Americans to pay more. That's next.
Money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline right now off the Bloomberg Professional Service. Paramount Global in talks to sell BET Network for $1.6 billion. Paramount Global shares, they are surging on that news, overcoming earlier losses. Right now, we got Paramount up by 4%. An update for the Dow, the S&P, NASDAQ with the S&P very close to 5,500 again, 54.97 right now, up 22 points. That is a gain of 0.4%. Dow Industrials up 94, higher by 0.2%, while NASDAQ is up 120. We are looking at a record there, up by 0.7%, with NASDAQ right around the 18,000 mark. 10-year yield 4.44%, the 2-year 4.73%. Spot gold down $4.50 the ounce to $23.27, a drop there of 0.2%. And West Texas Intermediate crude down 0.5%, 82.98 a barrel. PG&E has cut power to about 2,000 homes and businesses in Northern California as triple-digit temperatures, strong winds, and low humidity heighten the risk of wildfires. Right now, PG&E down by 0.4%. Again, repeating our top story, Paramount Global in talks to sell BET Network for $1.6 billion. Paramount shares right now up by 4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, as I mentioned, it's one of the most read stories on the Bloomberg terminal. It's today's big take. It's about the new retail tactic that's pushing Americans to buy more. The world's biggest packaged goods makers, including P&G, Unilever, and Edgewell, are using a tactic called upflation to claw back sales in the U.S.'s more than $100 billion personal care and beauty market. With more is Dina Shanker, Bloomberg News consumer reporter. She wrote the story along with Leslie Patton. She's here in our Bloomberg studio. Dina, we know about inflation. We know about disinflation. Jay Powell certainly does. Shrinkflation, we know about that. What is upflation?
So upflation is something that we noticed happening where these major consumer goods companies saw sales falling in volume. People were just buying less. So they said, hey, we actually have a new version for you to buy. It's even better than the one that you don't want anymore, and it costs more too. So my favorite example is deodorant. The deodorant sales were falling. People just weren't buying as much deodorant as they used to. So a bunch of these companies came out with new products called all over body deodorant, so that if you're not just worried about the smell from your armpits, but maybe from the backs of your knees or your feet or your chest, you can now buy a whole new, more expensive product and cover your body with it to stop the sweating.
What an exciting opportunity. I have to say, I've never thought about the backs of my knees. So this is really interesting. I mean, is it working? How are consumers actually responding to this?
So the companies say that people are responding well. They're buying them. Doctors have expressed a bit more reservation on the need for such products. We spoke to, my colleague Leslie spoke to someone who was thinking about using it for night sweats. But you know, I mean, who among us has not woken up warm in the middle of the night and just discovered that you can, you know, turn on a fan or the air conditioning or take off your blanket? There are a lot of solutions out there that you might already have in your home.
So what exactly is the scope of the problem here? Just how bad is it out there for the personal care market of these large consumer products companies? Like, what's going on? Give us some numbers here.
Well, so basically what happened was that in COVID, a lot of people discovered that, you know, like they don't need to shave as much and they're not going anywhere.
Right,
so,
I remember Gillette talking about this, right?
Exactly. Yeah. And so the volume sales have been falling each quarter, even though dollar sales are going up because they're raising prices because of inflation. Volume sales are down, and we're seeing it in food as well. We're hearing packaged food makers talk about it quarter after quarter, that volumes are falling. They don't know when they're going to stop falling. And so they're just trying to turn things around by basically offering you something they would think is very different, but we might not think is so different. I mean, is a specialized razor really worth double the price of the standard version?
Right. Is there anything specialized about it? I mean, that's a great example because for years, companies have been trying to make razors different and differentiate them in the marketplace. And like, if you look at the product lines from some companies, there's like a dozen different options and they all do the same thing.
Yeah, they all do the same thing. That's right. I mean, you might find some people who say that this particular razor did a particularly good job, and certainly the companies say that they're solving real problems and that these are, different areas of the body call for different products. But, I've been... I use a razor meant for a man's face, and it works just fine.
Well, you touched on what I was wondering and that's basically the company's defense. I mean, when you went to them in reporting this story and said, hey, it kind of looks like you're just charging more for something that's essentially the same as a very similar product that you have right now. I mean, how did they justify that?
They see what they're doing as really based in the consumer. These companies have done a lot of market research and a lot of consumer surveys where that's how they found out people are worried about the smell of their feet and all of these other issues. And in some ways, this isn't so different from what companies have always done. Innovation is sort of the lifeline of any consumer goods company. But what I at least saw on the food side was what felt like an increased sense of desperation among the food companies to really turn things around. I mean, these are companies with really thin margins to begin with, even in good times. And so when they're seeing volumes fall 1%, 2% quarter after quarter, they are really trying to figure out new messaging, new ways. I mean, one of my favorites was Doritos and Tostitos as side dishes and ingredients. And I was like, oh, that's
maybe in an omelet, you crush up some Doritos, put them in with your eggs.
I think everything works in an omelet, right?
Yeah, pretty much.
Yeah.
Yeah. Well, they were actually talking about Cheetos dust, which they call Cheetle, as a coating for chicken.
I could see that.
Yeah, I mean, you love frying.
Apparently, I really respond to marketing spin.
Yeah, I feel like everything that has been proposed in this article to you sounds like a great idea.
Good. We talked.
Like, Katie would buy that. Katie would buy that.
Yeah, absolutely.
Katie would buy that.
Like,
yeah.
Wow, that sounds like a really fancy razor. That's terrible. Is this solely a U.S. phenomenon? Are we seeing other companies in other countries adopt similar tactics?
So what we're seeing is that consumers in other countries are doing something similar to what a lot of U.S. consumers are doing, which is cutting back. But the way that they are now marketing these solutions does seem to be very American.
Is there something different about this moment? Because you've been covering the food side of things for years, and these packaged food companies have always tried to innovate when it comes to new product lines, and sometimes it works, sometimes it doesn't, and there are a lot of famous examples of times when it hasn't. Personal care companies have come out for years with new types of products, but are we at a point where there's kind of just like, I know this is like an uncreative way for me to ask this question, but are we just done innovating in this space? Are these, like, is this like last ditch, does it seem like a last ditch effort to you?
See it less as companies are done innovating and more like consumers are getting smarter. Mm-hmm. Consumers are pinched by inflation. Our budgets are tighter. We don't want to throw away food. We don't want to buy a new stick of deodorant when the old one hasn't run out yet. I think people are just less willing right now to just light money on fire.
Yeah, that's exactly what I was going to say is the difference in this period of time is that for the last couple of years,
NYMEX diesel August futures settle at $2.63, gasoline August futures at $2.57, natural gas August futures at $2.44.
Yeah, I mean, if we think about sort of the kind of tales that our grandparents told us, that they wouldn't buy paper, they would just make their grocery list on the back of, their
also,
phone.
NYMEX WTI
like,
crude August futures settling at $82.81 a barrel. That's down 57 cents or 0.68% on the session.
I thought that's where you were going. You're giving up all the
I never
secrets
take
today.
office supplies from the supply closet and bring them home.
It's good you said that on mic in front of the camera, so we have it for the record. I am curious, though. I mean, we're talking about staples here. I mean, maybe in the pandemic you could get away with not shaving or maybe not using a lot of deodorant, but I mean, does this sort of how do consumers deal with this, basically? We've been talking about a trade down across industries as well. It seems like companies are trying to sort of trick consumers out of that trade down here, but how do you see this going when you think about the state of inflation right now and just how stretched people are feeling?
So this was actually what really brought me and Leslie together on this, was seeing that people weren't just cutting back on things like eating out at restaurants, which is always an extra treat. People were cutting back on things that we think of as essential, and there was something like just really... It really changes the way you think of that word. What is essential? Well, is it essential if half of it is going to end up in the garbage? No, it's not. So I will rethink what is essential food for my family. I used to think we had to have, a consumer might say, I used to think we had to have fresh fruit in the house at all times. But now I realize that some of that fruit ends up in the garbage. I could just buy frozen fruit. And then we have fruit, but it doesn't end up in the garbage. Somehow, now the fresh side of it is no longer essential. So I think we are seeing a big shift in how people take care of themselves and take care of their families. And there are, entire movements that are about just like existing on less stuff.
I just want to remind you, there's also fruit available at the Bloomberg offices.
Oh yeah,
Okay.
I've
just for the record.
And like Oreos and other things that my kids ask for.
So I've heard. What is the Cheetos dust called?
Cheetle.
Okay.
Gross.
Yeah.
I'm so into it.
A big thank you to Dina Shanker, Bloomberg News consumer reporter. Check out her story along with Leslie Patton on the Bloomberg Terminal. And also, you can read more on Bloomberg The Big Take at Bloomberg.com and on the Bloomberg Terminal. Let's get a check of what's going on when it comes to world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. A House Democratic lawmaker is now the first in his party to publicly call for President Biden to step down as the Democratic nominee for president, citing his debate performance against Donald Trump, failing to effectively defend his many accomplishments. Representative Lloyd Doggett of Texas releasing a statement calling for Biden to, quote, make the painful and difficult decision to withdraw. On Balance of Power today, Massachusetts Democrat Representative Seth Moulton was asked if President Biden should step aside.
There's certainly a view that the chaos that would follow would be worse than just having a nominee that we know and that can trust. And then, of course, there's the other view that the debate was a disaster and we just need to move on.
Seth Moulton speaking with Bloomberg's Joe Matthew and Kaylee Lyons. Manhattan prosecutors say they would be open to delaying Donald Trump's sentencing in his criminal hush money case for up to 2 weeks. This after the Supreme Court ruling granting broad immunity protections to former presidents. Prosecutors say Trump's request to toss his conviction on 34 felonies should be fully briefed by July 24th. And Rudolph Giuliani, the former New York City mayor, federal prosecutor, and legal advisor to Donald Trump, was disbarred in the state after a court found he repeatedly made false statements about Trump's 2020 election loss. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
And how mammoth value is coming from the smallest of players. 3,184 hits, 431 home runs, and of course, the most famous stat that everybody knows, 2,632 consecutive games played. Unmatched career. Why are you doing this?
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's only one word: winning. You win on the court, you win off the court. And as you do that, you bring people along.
What's happening on Wall Street?
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. 18,000 on NASDAQ right now. NASDAQ Composite Index trading above that number just a couple of minutes ago. Got as high as roughly 18,003. Right now, up 120 points. NASDAQ at 18,000, up 0.7%. S&P higher by 22 to 54.97. The S&P 500 index up 0.4%. Also pushing higher is the Dow, up 107 right now, up by about 0.3%. 10-year yield 4.44% with a 2-year 4.73%. Spot gold down $5.50 the ounce to $23.26 for gold, a drop of 0.2%. And West Texas Intermediate crude down 0.5%, 82.91 a barrel. Bitcoin, meanwhile, down 1.6%, 62,332 on Bitcoin. Sources tell Bloomberg Robinhood Markets is considering offering cryptocurrency futures in the U.S. and Europe in coming months. On an update for the rest of the market, Robinhood Markets trading lower now by 1%. Again, recapping here, we've got NASDAQ trading right around 18,000, S&P up 21, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie.
Brent
We're
crude
watching
futures
shares
settle
of
at
Novo Nordisk and Eli
$86.24
Lilly
a barrel.
closely
That's
for a
down
couple
36
reasons.
cents or
Eli Lilly, for its part,
0.42%.
Katie, has an Alzheimer's treatment that was cleared in the U.S. as the second drug to slow progression of the mind-robbing disease that afflicts 6 million Americans.
Yeah, this is a big win, and it's a long time coming because investors and Eli Lilly have been waiting for this drug since it showed promise in clinical trials more than 3 years ago. So it's called Kisunla. I hope I'm saying that correctly, but it's really seen a number of regulatory delays on this road to approval. But apparently it got it today, cleared in the U.S., and you're not really seeing that work its way through the shares because there's a lot of news around specifically Eli Lilly and Novo Nordisk today.
Yeah, that's because President Joe Biden demanded price cuts on these companies' blockbuster weight loss and diabetes drugs. He writes, along with Senator Bernie Sanders from Vermont, that the companies are, quote, charging unconscionably high prices that are above those paid in other countries. This editorial appeared today in USA Today. They wrote that if pharmaceutical companies refuse to substantially lower prescription drug prices in our country and end their greed, we will do everything within our power to end it for them, they wrote. Riley Griffin is national healthcare reporter. She's usually based in D.C. She's here in the Bloomberg studio in New York. Riley, good to see you. I have a lot of questions about the president. We've heard Bernie Sanders talk about this before in the past, but I have a lot of questions about the message and also the medium. An editorial in USA Today. What did we learn from that editorial, and why were they doing it in USA Today?
Yeah, well, we learned that Senator Sanders and the president have really come out swinging on the buzziest subject in healthcare. I know you two are talking about it all the time in this room. It's something that a lot of patients can relate to. About 40% of American adults are obese. And so there's a really big market for that, and people are feeling those out-of-pocket costs. So they're seizing the moment, seizing the momentum. And USA Today, they're going broad. They're reaching a really broad audience this way. And it doesn't take a lot of guessing to know that Biden had a tough week last week. And in the editorial, he can really come out swinging.
Yeah, well, that's exactly what I want to talk about. This specific moment for President Biden, of course, everything he does right now is going to be under a microscope. When it comes to healthcare, I mean, what does his track record look like? Like, why the focus on this specific issue right now?
That's a great question. Well, he's really playing to his strengths here. For one, we know that via our own polling with Bloomberg and Morning Consult, that Biden has come out ahead of Trump when it comes to healthcare and specifically healthcare costs. We did polling in May that showed this. So in one case, he's playing to his strengths, but in another, he had the Inflation Reduction Act from a couple years ago that really focused on negotiating the prices of medicine for Medicare, the program that the U.S. has for seniors. And so this is yet another attempt to reduce those costs, but you know, healthcare prices and specifically drugs is always a winning strategy at the polls.
Yeah, you heard both candidates actually talk about it during the debate on Thursday for a very brief period of time, we should acknowledge. I want to go to this part of the editorial that I read from. If pharmaceutical companies refuse to substantially lower prescription drug prices in our country and end their greed, we will do everything within our power to end it for them. What power do they have?
Foreboding. Well, with the IRA, the Inflation Reduction Act, we could still see the U.S. tap Ozempic for price negotiations. That's something to look for in the future. And it said that tapping Ozempic and reducing the cost by 40% for Medicare patients could save the U.S. $1.3 billion. Annually. And this is a very big market, though. There are some questions as to how big of a dent the IRA would take in overall prices for broad Americans. And so we have to see, but there are a lot of efforts in Washington to reduce costs. We're seeing Congress take aim. Senator Sanders has invited the CEO of Novo Nordisk to testify this September. So this is a conversation that's not ending soon.
And not an American company, we should remind everyone.
Mm-hmm. No doubt. Though Eli Lilly, its competitor here with Mounjaro, is, and we saw shares falter today, even in the wake of big Alzheimer's news.
Yeah, shares still down about 1% or so. And it's interesting to compare and contrast here because, of course, when it comes to Novo and Lilly, they are the two leaders in this market. But it feels like most of the conversation around pricing and these high costs has really been focused on Novo. They've really shouldered the brunt of that criticism. But now, obviously, with this editorial, Lilly is really being pulled into it as well.
Lilly's being pulled into it. I think Novo has that name brand of Ozempic, but Lilly is right there with them. And to take aim at a big American company, you know, that does carry some weight. But as you said, Tim, this is a subject that Trump himself, the former president, has also been really focused on, the idea that the United States pays more for drugs than other countries. So it's one of those full circle moments where both sides of the aisle care a lot.
So we, as you mentioned, we talk about this in the studio all the time from a lot of different perspectives, from the Medicare perspective, from the perspective of what happens to the food companies and the restaurants if people are eating less as a result of taking these drugs. We talk about it from the perspective of what's happening when it comes to areas of the country that aren't necessarily obese but are using these drugs, like in wealthy areas of Los Angeles and New York City. And I'm wondering what this says to you that they're specifically charging these weight loss and diabetes drugs versus all the other drugs that are out there that Americans take that are expensive also.
You know, this is a personal view, but I think that the name recognition of these drugs makes for a really selling point in an op-ed like the one we saw today in USA Today. As we saw with the IRA, you know, there are cancer drugs, autoimmune condition drugs, any kind of biologic. If you're injecting it, it's going to cost a lot more money. And in fact, we saw Wall Street analysts today say, actually, the Ozempics and the Mounjaros and the Wegovy's of the world, they're fairly priced compared to some of these other biologics that we see. So not everybody on Wall Street is flustered. And certainly Goldman Sachs has projected that by 2030, we could see $130 billion in annual sales from these drugs alone. So there's a lot of market to tap. And just because we see the president and Senator Sanders come out swinging doesn't mean it will make a dent in their sales.
Yeah, specifically this note coming from Mizuho, Gerald Holes is the analyst there, saying that Biden's comments seem like, quote, a last-ditch effort to appease certain voters that when you think about the drug's benefits in diabetes, heart disease, other conditions, the list price of around $1,000 a month actually seems very inexpensive. But the fact that we are talking about two companies here, when you think about how big this addressable market could be, I'll put you on the spot with less than a minute to go, but why aren't we seeing more competitors in this space that have at least broken into the ranks that we're talking about when it comes to Lilly, when it comes to Novo?
You know, they were the market entrants, right? They were first there, but if you're in the pharmaceutical industry and you're not thinking about weight loss drugs, Wall Street is not smiling on you.
The sun
Everybody
isn't
wants
shining.
to know. The sun is not shining. So a lot of players are looking, especially given the potential to expand beyond these indications. As you mentioned, it's not just about weight loss anymore. And we're talking about addiction. We're talking about heart disease. So endless opportunity.
Riley, you mentioned Wall Street not smiling. It's not a pharmaceutical company, but it's certainly a company that has been hit by the development and popularity of these drugs. WW International, formerly known as Weight Watchers, down by 87% so far this year, down another 3% today to another 52 week
This is
low.
the AI moment for healthcare.
Yeah.
I've been saying that for like a year.
Okay, well.
It still sounds good.
I wonder how long you're going to keep saying it. Like, when is the AI moment going to happen?
I don't know, until we get another one.
Our big thank you to Riley Griffin, national healthcare reporter, usually based in D.C., here in our Bloomberg studio. Coming up next on Bloomberg Business Week, it's One More Thing. This is Bloomberg.
the linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one.
Its own commentary out of the White House, who note that Biden is to hold a press conference during the NATO summit next week. The White House also notes that they understand concerns over Biden's debate performance.
I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pelletier. Eli Lilly's Alzheimer's treatment has been cleared in the U.S. as the second drug to slow progression of the mind-robbing disease that afflicts 6 million Americans. It is a big win for Lilly and its investors, who have been eagerly anticipating this drug since it showed promise in clinical trials more than 3 years ago. Lots going on with Lilly, and the shares are trading lower today. We've got Lilly down now by 1%. Paramount Global is said to be in talks to sell its Black Entertainment television network to buyers that include BET CEO Scott Mills and Chen Chu, who runs the New York-based private equity firm CC Capital. Right now, we've got Paramount Global advancing by 5.2%. Sources tell Bloomberg TotalEnergies plans to exit its discoveries of gas condensate off the tip of South Africa to prioritize exploration in other areas closer to Namibia. The French giant braved one of the fastest ocean currents in the world to drill off of South Africa's coast, spending at least $400 million to find an estimated 1 billion barrels of equivalent of light liquid hydrocarbon. There are doubts, though, about whether the deep water finds can be made commercially viable. Shares of Total, they're down today by 0.1%. Oil, meanwhile, trading near a 2-month high after breaking out of its recent trading range on an escalation in tensions in the Middle East. Among some of the oil names today, we've got ExxonMobil trading lower. Exxon down 1.1%. ADRs of BP, they are advancing 0.5%. Chevron lower by 0.3%. And those are some of our top company stories at this hour. I'm Charlie Pelletier. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Democratic Representative Lloyd Doggett of Texas, the first in his party to publicly call for President Biden to step down as the Democratic nominee for president, releasing a statement saying Biden needs to make the difficult decision to withdraw. Donald Trump is scheduled to be sentenced next week in the hush money case, but that sentencing is now expected to be delayed. The Manhattan District Attorney says the sentencing can be delayed after yesterday's Supreme Court ruling on presidential immunity. Prosecutors said Trump's request to toss his conviction on 34 felonies should be fully briefed for the court by July 24th. And Rudolph Giuliani's been disbarred. A court found the former mayor of New York City and Donald Trump's legal advisor repeatedly made false statements about Trump's 2020 election loss. Child care experts addressing growing concerns about so-called pandemic babies' communication and motor skills. Leading pediatrician Dr. Jamie Peterson says early intervention by doctors and working with teachers can help get little kids back on track.
So much brain growth happens in the first 4 years, particularly in the first 2 years. And we basically said, put on a mask, stay away from grown-ups, don't talk to other kids.
Researchers say Black and Hispanic children were most left behind, and boys were more affected than girls. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Tim Stenovic and Katie Greifeld.
Amy, thanks so much. Do appreciate that update. Our one more thing today, it is among the most read stories on the Bloomberg terminal. You can check that out by going READ, go on the terminal. It's about New York City finances. They keep beating doomsayers, including its own mayors. Do you remember a few months ago, there were all these concerns about funding for early childhood education? I told this story a few weeks ago. I was walking by a library on a few Sundays ago with my son, and he said, "Can we go to the library today?"
Your son said that.
He said, yeah, because we passed the library. He's like, "Can we go to the library?"
Yeah.
Yeah.
That sounds like a fake story.
It's a true story. And I said, "We can't go because it's closed today because it's Sunday."
Because of Mayor Eric Adams. But
well, because of budget issues. They weren't open on 7 days a week for quite a bit of time.
Well, you have good news to bring home because apparently the City Council on Sunday finalized a $112 billion budget for the fiscal year that started on Monday, and that restores hundreds of $millions in cuts that Eric Adams once said were necessary to address that $7 billion deficit, but it's since been wiped away. So that money's coming back.
I can't believe you think my story is fake.
I mean, what 5-year-old boy is like, "Daddy, can we go to the library?"
This is how it works with kids. You walk by something that they've been to before and they ask if they can go there.
Right. My cat never does that, so I guess I cannot relate to you. But under this new budget, good news. Again, public libraries, they'll be able to remain open 7 days a week, and the city's cultural institutions will also get that $53 million that were slashed from their operating budgets. They're going to get that back.
It marks the 4th year that the city's official revenue projections were markedly underestimated. It comes after months of contention between officials over a disruptive round of cuts that were already implemented in November. As we mentioned, the New York Public Library suspended its Sunday service. They pleaded for donations to help offset the loss in funding, while some museums and cultural institutions had trouble keeping in staff.
So I feel like we make fun of economists and Wall Street strategists all the time for getting things wrong, but in this case, I mean, I wonder how the projections and reality were so far from each other.
Under promise and over deliver? I don't know.
Yeah, I mean, that is a strategy, but under promise to the point where you're suspending service?
Hey, speaking of strategy, I got no good segue here, but it is a headline crossing the Bloomberg terminal. The Trump sentencing has been rescheduled for September 18th, court officials say. We'll continue to bring you updates as we do get them. If you're sticking around on TV, the close is up next. If you're staying with us on radio, Bloomberg Business Week, we got a great program starting in just a couple minutes. This is Business Week.
This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Alex Steele. Volume's going nowhere, but we still have record highs. Let's keep that in mind.
It seems to be a familiar story.
I mean, really, yeah, especially Microsoft, Amazon. All right, here we are in the overall market. The S&P is making a run for it into the close at 0.4%, despite the fact the volume is still quite light. Digging beneath the hood a little bit, two really interesting things to think about. One is the home builders. That index down by 0.2%, but in beneath that, you have D.R. Horton, you have Lennar getting hit with a downgrade over at Citi and Raymond James to hold. They're worried about the Florida housing market, so that read-through is also quite interesting. And Paramount, it's like a dartboard. Who's going to buy the company? That stock up by over 5%. Apparently, Paramount is in talks to spell its Black Entertainment Network TV network for anywhere between $1.6 and $1.7 billion, Scarlett.
All right. Meantime, we're taking a look at these top stories. Auto sales hitting a speed bump. Tesla posting another quarter of falling deliveries, but the end result was less bad than anticipated. Overall, the industry is grappling with affordability issues as high prices and steep borrowing costs push consumers to wait if prices drop any further.
And a jolt for For JOLTS, job openings rise in May while the quit rate slows, and there are only 1.2 job openings now for every unemployed worker.
And Powell's progress report. The Fed chief says the latest data show inflation moving in the right direction, but central bank officials still need more proof before they can begin cutting rates.
So let's get right to it. Fed Chair Jay Powell, here's what he had to say from Sintra, Portugal.
We do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings. You can see the labor market is cooling off, appropriately so, and we're watching it very carefully.
Now let's kick things off now with Tony Crescenzi, portfolio manager and market strategist over at PIMCO, who joins us right here on set. Tony, good to see you.
Great to see you, Alex.
So you got the JOLTS, you got jobs coming on Friday. You have what Powell said in Sintra. We set up for 1 or 2 rate cuts this year?
Yes, and we think investors shouldn't overly focus on the timing. It's likely to happen eventually, and investors should just be patient about it. The important thing is that the interest rate's not likely to go up. And so if investors are happy with today's interest rates and yields, and we are, call it a 5% type yield, 6% or more for high-quality bonds, then they should invest today and not wait for interest rate cuts. It's usually by then that it's too late to get to the start of the party.
There was some talk today after the JOLTS that any sort of increase in unemployment could actually lead to a faster increase in the unemployment rate, and that's going to put sort of speed up pressure on the jobs market. Do you see that happening? Is that a risk at all?
It's part of the idea of, there's an old adage about walking a dog with the long leash. That's the monetary policy. You can't really predict what's going to happen next. So with respect to the unemployment situation, it could get worse faster than you think. So if you think that moving the leash around faster to try to fix things, to move the dog, which is the unemployment rate, you might get it wrong. It's just difficult to coordinate, to get right. So the Fed's trying to balance the dual mandate, which is, of course, a focus on inflation and employment. And as Powell said today, it's becoming more balanced, the risks on either side of that dual mandate.
And you have the dog. You'll know.
Yeah, I keep a very short leash actually on the dog. When it comes to the Fed, is it looking at non-farm payrolls and U3, the jobless rate, as lagging indicators or leading indicators here?
Typically, it's a coincident indicator. It's telling you what's happening now. But the Fed can easily say, because of many different gauges, that policy is restrictive. And what do we mean by that? Where the interest rate is high enough that it's likely to lead to slower and slower economic growth over time and disinflation. That seems to be the case based on, for example, the JOLTS data you mentioned earlier. The job openings have been declining steadily. Didn't happen in the latest month, but they've fallen from 12 million to 8 million. So doesn't that tell us that Fed policy is likely restrictive, and that if it were to keep the policy rate here, what if that 8 million became 4 million, in terms of job openings? We know that the level of unemployed is around 6.5, and that's not a good situation. The Fed wants to prevent that type of dilemma and get ahead of it, because it does take time for conditions to turn around.
I'm looking at the economic surprise indexes, and whether you look at Bloomberg's proprietary index or Citigroup's proprietary index, exactly, it goes down, down, down. Economists keep believing that the economy is stronger than what the data actually show. At what point does that self-correct, and how much of that is priced in right now?
Well, markets, like the Fed, are a little bit confused, and the Federal Reserve is in fact confused because, for example, there's something called the ISM index. It measures either the manufacturing sector or the service sector. The manufacturing index has been below what they call 50, which is a negative story for the economy, whereas the service sector index has been above 50. Turning to the jobs report, the unemployment rate's been rising, but the monthly payroll figures, a separate survey, has been strong. So there's conflicting signals there. So the Federal Reserve's default mode is to play risk management and decide, well, we're really not sure about what to do. And it's something that Christine Lagarde said while she was in Sintra. She says the key thing now is to manage the risks that inflation expectations rise again, because they could. Just decide on a path to fix that, which is to raise interest rate, but to weigh the costs. She said those are the three aspects of the story, and the Fed's now weighing it all, because they do have to think about the eventual costs of keeping the policy rate too high for too long. But they need to, and final word on this is, the old Volcker-esque way, Paul Volcker, the legendary Fed chair, is to keep at it. Remember, in 2018, he wrote a book called Keeping at It. key lesson of history is to keep at it. Chair Powell's even reiterated that idea, to ensure that the job is done. So, in other words, the most important innings in the 9-inning game is all 9 innings for the Fed. There is no let-up that can be permitted to get the job done right.
So if what you say is it doesn't matter when the Fed starts cutting, that they just will, then does it matter what that looks like? Like, are we normalizing? Are we really cutting? Like, does that matter?
Well, it looks like for the U.S. economy, a return to the old normal, as PIMCO might call it, where the interest rate is likely to be closer to historical norms at some point. The Federal Reserve, in fact, is forecasting that. Forecasting the Fed funds rate, which should stay around 5.25%, to eventually get to around 3.5%. Not zero. That's the important thing, because in the 2010s, in the aftermath of the GFC, the global financial crisis, it was zero, and of course, most recently. And so, a more normal, old normal style of interest rates is likely. But the key thing for the bond investor is its total return time. You have to be thinking about the stated yield, close to 5 to 6%. The potential for gains in price that make the total return higher than that. And what investor would want to miss it? Blink and you could miss that move, and you've got to be careful about missing it.
All right, Tony Crescenzi is portfolio manager and market strategist at PIMCO, and he is sticking with us because coming up, car buyers facing pressure from high prices, steep borrowing costs, and a cyber attack that hobbled dealerships across the U.S. We've got the latest numbers.
Plus, we're going to get insight on the global economic outlook and the impact to the U.S. presidential election. Our guest is Nouriel Roubini, CEO of Roubini Macro Associates.
And Alex mentioned this, Paramount Global in talks to sell its Black Entertainment Television Network for $1.6 billion. We've got the latest on potential buyers. All that and more coming up. This is The Close on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
The job market is quite strong. There's no major job losses. The economy is still chugging along.
This Friday, Bloomberg will bring you crucial data and expert analysis at terminal speed.
We have a labor market that is not inflationary. Perhaps some cooling is in front of us.
We're now starting to move into the more normal stage. There's a lot of things under the hood here.
The June Jobs Report, Friday on Bloomberg. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
We are waiting for total U.S. auto sales for the month of June. They likely lost some momentum. You got high prices, steep borrowing costs, and the cyber attack that hobbled dealerships across the country. Joining us now for more is Bloomberg's Molly Smith, who covers the economy for Bloomberg. And Molly, I just wanted to get some insights as to the consumer pinch when it comes to, say, auto loans and that affordability part.
Yeah, you really see this in every interest rate sensitive part of the economy right now. This is happening as well in the housing market, too, that there's a similar dynamic going on of high prices, high borrowing costs when it comes to housing as well. And, you know, auto dealerships and as well as home builders are doing as much as they can to provide incentives for consumers, but it's still just a really big ask. And if these are purchases that you can put off, consumers are definitely doing that.
Yeah, absolutely. I think about the biggest expenses any household has to bear. It has to be buying a home, paying for tuition, higher education tuition, and of course buying a car. And of those, buying a car is a must-have if you have a job.
Totally, yeah. I mean, of course, if you're also watching what's going on with New Jersey Transit right now, you probably want a car even more to be avoiding that. But these are steep payments. I mean, especially when you take into the totality of what owning a car entails. It's not just the payment on the car loan. It's also car insurance, which we know has been rising at an insanely fast pace, up like a 20% year-over-year increase in the CPI in the last few months. So that's been expensive. And similar with the housing market as well, that when you have a higher starting price for a home or for a car, it costs that much more to insure it.
What are we seeing on the delinquency front when it comes to the consumer because of these high loan rates?
Yeah, it's definitely creeping up, but you have to remember this was starting at such an artificially low rate. We had so much stimulus activity during the pandemic that really depressed delinquencies down to really, really low levels. So they are coming up, but you're seeing this still more in like the low single-digit percentage area of delinquencies, and naturally really affecting lower income consumers the most. So it's not really a widespread pickup just yet or anything that's really sounding the alarm.
Yeah, but the question is whether that's a slippery slope, and there's more to come. Molly, thank you so much. Bloomberg's Molly Smith covers the economy for us. We still have Tony Crescenzi joining us, portfolio manager and market strategist over at PIMCO. And Tony, we talk about the consumer being pinched by these high borrowing costs, whether it's for your car or whether it's for your home loans. But we are starting to see evidence that perhaps people are coming to terms with these high borrowing costs. Definitely people are now, there's more activity in the housing market, and the average mortgage rate is a lot higher than it was just 3 years ago.
Right. In fact, about 15% of households now have a so-called weighted average coupon of 5% or more, and it's increasing by 1 point per month, so it's slow and steady. It's probably what the Federal Reserve wants. It doesn't want a sudden crash in the economy. It wants a so-called soft landing, so it's consistent with that. So the theories are, number one, the excess saving that built up during the pandemic and afterward is depleting. But there are points of resilience. Household net worth, the figure released quarterly by the Federal Reserve, shows household net worth up substantially. Just think of the stock market, think of home prices, big drivers of that. We're talking $50 trillion in 5 years to $160 trillion or so. It's massive, and it's helping the consumer to keep going. So all of this might suggest, as Molly said, some weakening in the economy is in the offing, but not substantial weakening, which is a Goldilocks type scenario for the equity investor, because it suggests cash flow for earnings, buybacks, and dividends will stay high and keep the game going.
I wonder how you see this playing out as we get closer to the November elections, because so much of how people vote depends on how they feel economically.
The dynamic there is that it takes a long time for changes in economic conditions to affect how people feel about the political dynamic. So it probably won't change significantly between now and then unless there's a sudden change in the economy, either a sudden stop or a significant acceleration, and or a change in the inflation situation that changes perceptions about it. So don't look for that to change the equation too much.
So you mentioned how, yes, we've run down XX savings, but the household wealth has really grown. Does that good for the equity market? What about for the bond market?
For the bond market, it matters too, because investors own credit. In the Bloomberg Aggregate Index, which is a market-weighted index, about 40% U.S. Treasuries, 25% mortgage securities, and 25% corporate bonds, which is the point. Cash flow matters. In the end, that matters, because it's the cash flow, meaning monies that companies generate, that pay back the bond investor for interest and money back at maturities. And that confidence in the outlook for cash flows related to the economic situation is what's driving credit spreads tighter, meaning the yield difference between corporate bonds and treasuries are really tight, and reflects the strength of the economy. So it is important, but we would say to a bond investor, you needn't step too far out in terms of interest rate sensitivity or credit risk to get a 6% type yield these days, 6% or more, so even 7 if you think about the global bond supermarket, 130 trillion of bonds. There's lots to do in the world. It's actually pretty exciting. Crank out your Fobosi book, the 1,500-page book on fixed income. Lots of little things to do to gain a little extra return above the stated yield.
That's this weekend's reading, clearly.
1,500 pages, all on that for July 4th by the barbecue. When you take a look at, say, the money then in money market funds, it's still earning 5%. How much of that my money should stay there?
It depends on the individual, of course. That's a disclaimer. But here's the data since 1978. 90% of the time, core fixed income, maturities 5, 6, 7 years, like the Bloomberg index that I mentioned, the aggregate, they beat cash, like money market funds and so on, 90% of the time by an average of 3 points per year over 3-year periods. In other words, and it makes sense. Imagine if yields fell a half point, the duration, 6 years, multiply that times 50 basis points, and you get a 3-point price gain in these bonds with the 5, 6, 7-year type maturity. Add that to your yield of 5, and you could get an 8% return in 1 year, or spread it out over time. You can see a pretty good average over that period. So the timing is, and the final word on this is, the timing is usually best just before the peak in the federal funds rate, which we think is already in place. And I should add, finally, that the returns for core fixed income tend to be cash increasingly as the Federal Reserve embarks on its interest rate cut cycle. So it's too late to be tactical. As I said, it's time to be thinking about total return in bonds, the stated yield plus added gains to that because of price.
Hey, Tony, good to see you. Thanks for stopping in. Really appreciate it.
Great to be with
Tony
you.
Cosenzi, portfolio manager and market strategist over at PIMCO. So I guess I need to rethink that money market fund at 6%.
You know, I like what he said about it's too late to be tactical. That's good advice in general for anyone who thinks that they can kind of like come in right when the timing is good and get out right before it turns, because that never ever happens. Once you get out, it's, you know, you never want to get back in because you're always worried.
Exactly, yeah, and I'm like super paranoid. But it's also interesting too that the idea that if I made a lot of money, say in corporate bonds, and you were mentioning how household wealth is really ticking higher, you're just going to reinvest it.
Yeah.
So it's just going to keep spreads lower. I don't know. And then it's like a fulfilling prophecy. Anyway, all right, coming up, a check on U.S. retailers as we kick off the second half of the year. We're going to get a view from the sell side about the trends in that he's seeing in our Top Call segment. This is The Close on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Time now for our our top calls, a look at some of the big movers on the back of analyst recommendations, starting with Lennar. The home builder hit with 2 downgrades today from Citi and Raymond James. The latter cites concerns around a softening Florida housing market where resale inventory is surging due to higher insurance rates and property taxes. That analyst cutting his outperform rating to market perform, shares down about 1 3/4%. Next up, CrowdStrike, a downgrade on the security software company to neutral from overweight at Piper Sandler. CrowdStrike is on a strong run this year, up more than 50%, making for a less favorable risk-reward scenario for investors, according to the analyst. The stock down almost 2%. And finally, PayPal lifted to positive from neutral at Susquehanna, which set its price target to $71. The analyst cites valuation for the upgrade and touts PayPal's dedication to profitable growth. He says PayPal's consumer-facing improvements should increase its value proposition for branded checkout. The share's up by almost 1.5%. And those are some of our top calls. Now, before we get to our analysts, we do want to clarify a call from yesterday. Next Era Energy Partners, ticker symbol NEP, was downgraded to sector perform from outperform at RBC Capital Markets. Our graphic showed the logo for Next Era Energy, ticker symbol NEE. So we're correcting this mistake on air today.
All right, let's turn to the consumer here. The first half of the year saw consumer discretionary sort of right in the middle of the pack for the S&P. You got everyone from Walmart to Nike flashing some warning signs about the health and financial health of U.S. households. Our next guest said he's neutral on apparel retailers. Joining us now with more of his insights is Zachary Waring, an equities analyst over at CFRA. And I'm looking for the year to date. You got Deckers Outdoor up 41%, and then Lululemon down 40%. How do you pick winners and losers in this market when it comes to retail?
Yeah, thanks for having me. So, it's been tough. Deckers has done really well this year. Lululemon, not so much. We're really positive on Lululemon. We think investors and analysts aren't giving Lululemon enough credit for kind of past performance. We think their management team has continued to perform over the last 10 years, and we think they'll turn it around here. I think investors got a little scared from that first quarter report, where they kind of said the slowed growth in the U.S. is, a big deal. And I think it is, but I also think that they're able to grow in other countries and other parts of the world to offset some of that slower demand in the U.S. So, we like companies that have a proven track record of growth, and we don't like companies that have a very mature, saturated U.S. market with little in terms of growth aspects outside of the U.S.
Right. Okay, so I get what you're saying. You're thinking something like Foot Locker or American Eagle is more of a mature brand, but what about a mature brand that is in the process of reinventing itself, like Gap?
Yeah, so we have a tough time getting behind Gap. We've heard this story quite a few times over the last 10 years, and they've been through many restructurings, and they've, a couple of times you thought that maybe they would turn things around and become more efficient on the operating side. So we have a tough time getting behind Gap. We know a lot of other analyst investors have kind of hopped on that train, but we're just, with us, we like proven track records for more than just a few quarters in a row. And so that's, we would probably need to see Gap, perform for a year or two before we really get positive on them. Like I said, they've got a lot of older brands that have saturated in the U.S. They have, they don't have any plans to grow outside of the U.S. really. And so, we don't like, expectations we think for Gap are pretty high.
Let's go to the fancy pants sector. You're talking Hermes, Ralph Lauren. You cover all those as well, including Kering, for example, Cartier. Does the high end, have they found their bottom, and is it time to sort of re-rate higher, or do you think the trough lasts a lot longer?
No, we really like LVMH. We think LVMH is cheap here. They've got proven growth over the years. Their margins have improved dramatically since COVID. When they bought Tiffany, they had a big boost to their operating margins because of the margins at Tiffany. And we just think they're a top player in luxury. So we think, their brands are proven, and we think, they'll continue to do well and perform well. And that's who we like within the luxury space. Kering's is a good stock as well, but we're not as positive on Kering.
I'm curious to hear from you in terms of operationally. We know that a lot of the supply chain issues have gotten sorted out, and freight costs are a lot lower, so that's now a tailwind. What kinds of companies are in a best position to benefit from that, to really take advantage of that?
Yeah, we actually think that the lower freight cost tailwind is almost done. We think the comps are starting to get a lot more tough. So going into Q3 and Q4, you started to hear a lot of these companies state, that they were seeing, major headwinds from lower freight costs. So we think you're kind of towards the tail end of that trend. And now we think, it's going to be up to management and how management at these companies can handle the growth and operating. So, that's why we continue to go back to who's a proven, what's a proven management team and who's proven over the last 5 or 10 years who can operate in just about any environment.
Absolutely. It goes back to strategy and execution and talent. Zach, thank you so much. Zach Waring here joining us for his take on the different consumer companies, as we've seen kind of a rough couple of weeks here for a lot of those consumer names with the latest anecdotal from their earnings.
Yeah, I don't envy his list. He covers like every single company out there. So to create one narrative must be extraordinarily difficult. But, Lululemon, okay, picking a bottom.
All right, coming up, we're going to get insight on the global economic outlook from the one and only Nouriel Roubini, CEO of Roubini Macro Associates, and the famed NYU Stern School of Business Professor Emeritus. This is The Close on Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
You can't really predict what's going to happen next. So with respect to the unemployment situation, it could get worse faster than you think. So if you think that moving the leash around faster to try to fix things, to move the dog, which is the unemployment rate, you might get it wrong. It's just difficult to coordinate, to get right. So the Fed's trying to balance the dual mandate, which is, of course, a focus on inflation and employment. And as Powell said today, it's becoming more balanced, the risks on either side of that dual mandate.
That was Tony Crescenzi, portfolio manager and market strategist at PIMCO, speaking with us at the top of the hour. For more on the economic outlook, we're joined by Nouriel Roubini, CEO of Roubini Macro Associates and NYU Stern School of Business professor emeritus. Nouriel, it's really good to see you. Tony Crescenzi was talking about sort of the Fed is in risk management mode. Are they doing this right?
Yeah, I would say they overall are doing it right. On one side, they're still worried that the surge in inflation occurred in the first quarter may be slightly more than temporary, even if the latest number suggests a softening of core PCE. But now there's also something of a slowdown of the economy, something of a softening of the labor market. There is job creation, but the unemployment rate has ticked up towards 4%. So there is better balance and there is a slowdown in the economy. So based on their dual mandate, they have to worry about the inflation, they have to worry about growth as well. So I think they're right in waiting until they start cutting rates.
Nouriel, do you think that the risk should be more on the inflation side or the growth side, in that the risk is higher inflation or lower growth? Which camp would you be on?
Well, until recently, I would have argued that the biggest risk was the upside on the inflation side, but now economic growth has slightly moderated. Consumption is slowing down. There is some slackening in the labor market. So I think that the Fed wants to achieve a soft landing, but not a softish landing. They don't want to go to 2% with even a short and shallow recession. And therefore, they have to start thinking also about the downside risk to economic growth.
Are we out of the woods yet in terms of we can avoid a recession? At most, we'll get a soft landing?
Yes, with one caveat. You know, a year ago, everybody worried about a real hard landing. Then there was a risk of a softish landing. Then people said, no, we're going to achieve a soft landing. But recently, there was both a growth above potential and inflation above target. So the risk was that actually the economy was growing too fast and will be in a no landing situation. And no landing will lead the Fed to stay high for longer or even higher for longer. That was the risk. While I would say that right now the softening on the growth and labor market side suggests that maybe the risk of a no landing is reduced and we're going towards maybe something closer to the goal of the Fed, that is a soft landing.
In terms of global economic risks and what might keep you up at night, I know that you worry about a lot of things and a lot probably keeps you up at night, but globally, when you look at what's going on in the Middle East, or when you look at what's going on with Russia and Ukraine, what's happening in Europe with those elections taking place in France and the UK, or China, what is the single biggest concern for you as it relates to how the Fed proceeds?
Well, the biggest risk would be some kind of geopolitical shock that will lead to some spike either in energy or broader commodity prices. The initial brutal Russian invasion of Ukraine led to a spike not just in energy prices, but also food, fertilizer, industrial metals. If there was a worsening of the conflict between Israel and Hamas, an escalation that includes Hezbollah and Iran, of course, there could be a spike in oil prices like the one we saw in the stagflationary episode of 73, 79. And the conflict with China is more of a slow motion, a build-up of a Cold War is getting colder, risk of protectionism. And of course, what's going to happen on the trade side depends very much on whether Trump is going to be elected or Biden or some other Democrat as well. So I would say all central banks worry about some geopolitical shock that spikes either energy or other commodity prices that will lead to an increase in headline inflation that could eventually lead to a second round effect of an increase in core inflation and be a stagflationary shock that increasing inflation reduces growth in a way that will make really hard the goal of central banks to achieve a soft landing.
Putting aside the U.S. election for a second, because we will get to that, what is the risk that we should put on the French parliamentary second round election and the result of that?
Well, there is certainly a risk that the party of Le Pen reaches an absolute majority. Their fiscal program, the program about Europe, is really, if implemented fully, something will be dangerous, not just for France, but also for Europe. However, I feel that even if they were to come to power, they'll be moderated. They'll be moderated because there are constraints coming from the European Union, from the ECB. There'll be in cohabitation Macron. And most importantly, there is market discipline. If they were to follow a reckless fiscal policy, there'll be a massive widening of their sovereign spread, a fall in the stock market, a weakening in the euro that then will force them to adjust. We know what happened in the UK, where the government of Liz Truss did not survive more than 44 days when the bond vigilantes came into action. So I would say the biggest constraint to a radical economic and fiscal policy in France comes from market discipline, and that's going to lead them probably to moderate if they come to power, if they want to stay in power. The alternative, a hung parliament, is not much better, because that hung parliament implies a minority government. One's going to be subject to a vote of no confidence, eventually a caretaker government, and to policy and political chaos as well. So either way, there are risks in France, but I think that market discipline is going to constrain whoever is going to be in power from doing things that are too extreme.
The rise of Le Pen indicates the rise of populist parties. Are there instances where populist parties are good for markets and for the economy?
It depends. Some of these populist parties start from a very populist economic agenda, and then they moderate. In the case of Italy, Meloni, when she came to power, there were worries there'll be a loose fiscal policy, there'll be a reversal of structural reform. That did not occur, and some do hope that Le Pen can be, the way I put it, be Melonized, that once power is going to moderate. There are differences between Italy and France. The program of Le Pen is much more to the right of the one of Meloni. Italy had a carrot of 200 billion euros of low-cost loans or grants from the EU, and Draghi played the role of, paternal guidance in the case of Meloni. There is not the same figure in the case of France. So they are not, I don't think that France will get under Le Pen fully Melonized, but they're going to moderate compared to what they are right now, if they were to come to power.
All right, Nouriel Roubini is CEO of Roubini Macro Associates and, of course, of NYU Stern School of Business. He is sticking with us because when we come back, we'll get his thoughts on the U.S. presidential election and what that outcome would mean for the U.S. economy and the global economy. This is The Close on Bloomberg.
culture. As Linda Ammann tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
We are back with Nouriel Roubini, Macro Associates CEO and NYU Stern School of Business Professor Emeritus, who recently wrote this about this November's U.S. presidential election. Quote, "As the saying goes, it's the economy, stupid. Trump's proposed economic policy agenda is now the greatest threat to economies and markets around the world." Nouriel, when it comes to a lot of the policies, particularly towards China, Biden and Trump actually see eye to eye more than they are facing off against one another. But what you are pointing to is really the threat of increased sanctions and more protectionist policy, isn't it?
Yes, it is. Of course, Democrats and Republicans want to be tough on China. But Biden administration had a view of creating what they call a narrow yard with high fences and concentrating on some critical technological factors and sanctions, while the plan of Trump, at least at face value, is one of imposing a 10% tariff on all the imports coming to the United States, even from friends and allies like Europe, Japan, South Korea, you name it, and up to 60% on Chinese goods. So I would say that the big question mark is going to be whether it's going to head and do that, or whether it's going to offer some carrots and sticks, telling, for example, Europeans that if they spend more on defense or if they change some of their trade policies, they may be subject to exemption from the 10% tariff. Same thing for China. He may gradually increase the tariffs every month to reach eventually 60%. But if China does certain things, maybe he stops short of that. But the point is that any tariff is a regressive form of taxation. It increases import prices, and it causes a higher inflation. What it could alternatively do, and people have discussed it, is the idea of, instead of a generalized tariff, to force the other countries to accept the depreciation of the dollar and an appreciation of other currency, something equivalent to the what happened with the Plaza or the Louvre agreement. People talk about the Mar-a-Lago agreement on currencies. But that would be similar in terms of impact on inflation to a generalized tariff as well.
So, Nouriel, if we leave the dollar out for a second, what is the asset class that you think is going to have the most exposure to the volatility of the election based on the policies that we do know? Bond market, equity market?
I would say that protectionism is going to lead to a gradual increase in inflation, and that will be something will be of concern certainly to the bond market. But an escalation of trade friction or a generalized trade war with the rest of the world, because our trading partner might also impose tariffs against the United States, is also a threat to the stock market. A global trade war not going to be good for the stock market.
All right, Nouriel, thank you so much. We truly appreciate your patience and your time today. Nouriel Roubini, Roubini Macro Associates, CEO and NYU Stern School of Business Professor Emeritus. You know, it was interesting. I was talking to Ira Jersey today of Bloomberg Intelligence, and he was saying the prevailing belief, if you have a Trump administration, that you will get that steeper curve, and because you're going to have higher inflation and less growth. He was also saying that you may also get, though, a more dovish Fed leader, in which case you might actually see a different kind of steepener and more buying in the front end as those front end yields come down because you have a different dovish head of the Fed.
Because President Trump would replace the Federal Reserve chairman with someone who's more amenable to his way of thinking, which is lower borrowing costs.
Exactly.
Across the board.
It's interesting sort of different dynamics on what the steepener is, in addition to where in the equity market you might feel the
outcome might be similar, but the rationale for it might be different.
Yeah, exactly. And also whether you're looking at bear steepers or bull steepers, I don't know, they steepen in different ways. It's a thing.
Bear, bull, you know.
Yeah. All right, coming up, Adam Turnquist is Chief Technical Strategist at LPL Financial. He's going to count us down to the closing bells as we look at a market that on the surface is making a little move to the upside here. The NASDAQ at a record up 0.7%, the S&P up 0.5%, also at a record. Volume, though, very light. This is the close on Bloomberg.
Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
DOJ or other authorities
authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood.
So we're looking now to the market on close imbalance. The S&P 500 1 billion to the sell side. NASDAQ 100 430 million to the sell side. Dow 30 170 million to the sell side. Mag 7 stocks 50 million to the sell side.
This is Bloomberg's The Close. We are counting you down to the closing bell about 10 minutes away. Here is where we stand. The S&P is a little higher on the day. The NASDAQ at a record, S&P at a record, NASDAQ 100 at a record, Microsoft, Amazon, and Apple all at records. You see the theme here. On the flip side, though, you have NVIDIA. That's really the tug on the NASDAQ here, down another 1.7% versus Tesla getting a nice boost higher. That push and pull, Scarlett, right there for the NASDAQ.
It's another melt up, even though there doesn't feel like there's a lot of catalyst for pushing this market higher right now. Let's bring in now our stock of the hour. We're monitoring shares of Paramount after Bloomberg learned about exclusive talks for the company to sell its BET network. Sources say an offer was discussed with private equity investor Chin Chu for at least $1.6 billion. Representatives for Paramount and Chu declined to comment. Joining us for more is the one and only Abigail Doolittle.
Well, thank you. That's a very kind introduction there. And Paramount once again in the news. I mean, we've been hearing so much about strategic alternatives for Paramount over the last few years. In fact, just this morning, Barry Diller said to be weighing some sort of bid for Paramount, the overall company. Now, relative to this piece of news, yes, they are said to be in exclusive talks with BT Networks for a $1.6 billion bid. And they are in those exclusive talks with the BET CEO, Scott Mills, and the head of CC Capital, Chin Chu. Now, BT Network was sold to Paramount's predecessor, Viacom, in 2001 for $3 billion. So this is a pretty big markdown from those levels. And it's not the first go-around. Byron Allen, I believe he had put together a $3.5 billion bid not so long ago. So that would have been an increase. Tyler Perry, but dropped out of those talks. And then when I was talking about Paramount, of course, not so long ago, Sherry Redstone, who has a controlling stake in Paramount, she walked away from a proposed merger with Skydance Media. Now, why they want these strategic alternatives, if we were to take a look at this chart from its peak back in 2001, down 90%, years of declining profit growth. So in terms of that declining profit growth, in the meantime, before potentially getting one of these deals done, because they really have to sign it for anybody to believe it, they are said to be working to cut about $500 million in costs. The stock right now, though, investors very excited, up more than 5%.
All right, Abigail, thank you so much. Really appreciate it. Great chart there. Abigail Doolittle joining us. Let's get more market analysis and welcome Adam Turnquist. He's Chief Technical Strategist at LPL Financial. Hey, Adam, we were talking about the melt up in the overall equity market. Individual names definitely moving as well. Why this melt up?
I think it's just the momentum continuing in this market. It's relatively narrow. That's really what we witnessed over the last month and a half. We had a breakout through those March highs. However, underneath the surface of the market, participation pretty underwhelming. We had more 4-week lows last month than we had new highs. Volume underwhelming as well. Of course, the catalyst has been the mega caps, the Fab Five, whatever you want to call them. It's really been driving this market. And right now, technically, we're watching for a rotation to really make this rally sustainable. Haven't quite seen it yet.
You speak of the Fab Five, but really when it comes down to what's driving this market, whether it's the S&P 500 or the NASDAQ 100, it's really NVIDIA. When you look at the charts for NVIDIA, what does it tell you? And I ask this because, of course, it dictates how the S&P 500 ends up moving.
Absolutely. It's drove about 30% or more of the S&P 500's total return this year. So it's been consistent leadership. Right now, technically, it did violate a shorter-term uptrend. We had very low volume on this latest move to record highs, seeing a bit of a pullback and some shorter-term technical damage that does raise the risk of a deeper pullback here. We don't cover the name, so making the technical observations that there could be some downside risk. Same thing in the semiconductor space. Very overbought on the SOX index. Recently hit 35% premium to its 200-day moving average. Momentum slowing a little bit right now. Historically, that suggests we could see a little bit of a pullback in the semi space. Extrapolate that into what it means for the S&P 500. Again, we could see a little bit shorter term of a pullback or at least a pause in this rally.
Well, what does it mean, though? Because over the last few days, what's been leading has been like Microsoft, Amazon, and Apple, and not NVIDIA. Can we sustain this kind of bull market without NVIDIA?
I don't think we can, at this level, this degree, when we're talking about one stock driving 30% of the S&P 500. It's been done before, but on a sustainable, longer-term basis, and tactically, if you're looking to put money to work, we think there'll be a better opportunity in the second half. Some of these divergences in breadth are simply just too hard to ignore.
You know, I'm looking at the VIX. It's now below 12, 11.96. If you want to use that as your benchmark for volatility, we've got a low volatility backdrop, and we've got, as Alex was reminding us, record highs for the S&P 500 and NASDAQ. I know you've done some work that looks at what other periods in history resemble what we're seeing now. What did you find, and what was the outcome of those historical analogs?
So a few different things when we look at, first on volatility. Historically, going back to the inception of the VIX, it tends to trough right around July and then ascend into, call it late September, early October is when it historically peaks. Election year, it peaks right around the election day. No surprise to anyone there. But from here on into really to the fall, the VIX tends to creep higher. In terms of seasonality and what this year looks like, interestingly, we ran a correlation analysis looking at the progression of this year, compared it to every single year, the first half of every single year over the last 70 plus years. And the most correlated is 1995. So if you flash back, that was a soft landing scenario. We had the dawn of the internet. The parallels there are to AI. So some interesting analogs to look back in terms of seasonality.
Yeah, that is really interesting, particularly, like you said, in an election year. Before we let you go, the Russell, it has just been stuck in this channel for the whole month of June, waiting for a better economic outlook to really start to outperform. Do we go back to the 200-day? What do you think?
It's range bound right now. Maybe you bounce off the lower end of that range near the 200-day. And that's another interesting chart when you think about the context of a bull market and it being sustainable. Small caps don't need to lead the bull market, but they should at least participate. We're not seeing that in the Russell or the S&P 600. Really just range bound for now. We think it should be neutral small caps until you see a breakout or a breakdown from that consolidation range.
All right, good stuff. Adam Turnquist, Chief Technical Strategist at LPL Financial. That was fascinating on the VIX and how it tends to hit its lows right around July. And, of course, it'll peak in November, but between now and then, anything goes.
Yeah, you can see the curve. It's really quite, if you do VIX index CCRV, it's really nice to see that curve there. I go back to what Lori Calvasina said. Did you see this? Upgraded her S&P forecast, but she said she categorizes herself as a nervous and jumpy bull. It's like she can see the S&P going to 7,500 from 5,300, and that's where her upgrade was, but like she didn't like it.
Yeah,
It didn't make her feel good.
That's a really good way of characterizing what's going on here. We're making record highs where it's a melt up, but it feels very precarious. It just feels like there's not that much conviction in it, even as people are saying, yeah, we could still see it kind of moving higher.
Right, and you had a truist also saying, like, let's give the bull market benefit of the doubt, but that's not more like, go buy this market. It's not Dan Ives and tech.
Right, no, where he said the party's going to go on until 4 a.m. and Apple just showed up. All right, we're moving closer to the closing bell. We've got full market coverage right here on Bloomberg Television across our various platforms. This is the close on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Alex Steele here, and of course here to take you through the closing bell with a global simulcast. We're joined now by Tim Stenovic and Katie Greifeld, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Right now, Tim, I'm looking at indexes at their session highs, save the Russell, but that's usually the case, and the VIX now below 12, so low volatility and a melt up.
Yeah, Katie was in here a little earlier talking about this being, I think she said, a boring week.
A little bit of a snoozer.
And I gotta say, not so much of a snoozer when it comes to fresh highs for the NASDAQ 100, NASDAQ Composite, S&P 500. That's the direction we're going in right now. Yeah, volume's a little light.
But that's
on
the
this
thing,
Tuesday.
is that we're at all-time highs. Volatility is so low. I saw some stat today that it's been 300 trading sessions since we saw a move of 2% or more to the downside. You think of just the volatility, that seems like it's just vanished from the market.
Yeah, and we were just talking to a technical analyst that said you may see volatility towards the election, but from now until the end, forget it. And that's why you have like Lori Calvasina talking about the nervous, jumpy bull and upgrading her forecast for this year.
The jumpy bull.
Yeah, the nervous and jumpy bull. That's how she categorizes herself. On the same day that you see Truist talking about that the rally deserves the benefit of the doubt, but none of that feels like super, super strong conviction, guys.
Yeah.
No, it doesn't. And I guess in the absence of super high conviction and people waiting for any kind of clue from the Fed or from the data with the jobs number coming out on Friday, we're just kind of slowly pushing the indexes higher.
And speaking of, there are the closing bells. You're looking at record highs for the NASDAQ 100, and the S&P. Volume pitifully light, but we're definitely seeing the records all across the board. You have the NASDAQ finishing up by 0.8%, the S&P up about 0.6%, the Dow up 0.4%, Tim.
Okay, so far, year to date, the S&P 500 is 15.5% higher. Taking a look under the layers of the S&P 500, we did see 343 stocks, everything's still getting settled. Moving to the upside, 159 declining today, Scarlett.
All right, I'm looking at the sectors, the IMAP, and what you'll notice is a lot of green. There are some red spots, so let's focus on the decliners. You've got healthcare down about 0.4%, and energy losing 0.5%. Interestingly, oil prices started the day higher before erasing their gains and finishing lower. Among the big advancers, consumer discretionary and financials, each gaining more than 1%. Consumer discretionary getting a boost from Tesla. Communication services also up by 0.8%.
Okay, well, let's talk about some of those stocks that were pushing IMAP segments into the green today. I do want to start with shares of Tesla, finishing the day higher by more than 10%. They extended their gains for a 6th day in a row. It's the longest winning streak in about a year. The company earlier today did report deliveries for the second quarter that beat the average analyst estimates. They were not higher than they were a year ago, though. Sales were down 4.8% from a year ago. Tesla did improve when it came to a sequential basis in the vehicles that were delivered in the vehicles that were delivered in the first 3 months of the year. Tesla's up a little over 25% just in the last 6 sessions. Still down, though, about 8% so far this year. Not the only EV stock moving higher today. Shares of Rivian also moved higher. Speaking of car deliveries beating estimates, shares higher today by about 7%. Rivian shares soaring after the company reported deliveries for the second quarter that beat its own expectations and Wall Street estimates. Look at these numbers, though. Delivered 13,790 vehicles. They did see deliveries between 13,000 and 13,300. So a really small number compared to other players in the vehicle space, and certainly compared to Tesla. Rivian's still down more than 30% so far this year. And finally, Paramount Global shares gained after Bloomberg News reported that the company is in exclusive talks to sell BET to buyers that include BET CEO Scott Mills and Chen Chu, who run the private equity firm CC Capital. Paramount shares were also higher earlier in the session. This was after the New York Times reported that Barry Diller was considering making a bid. When is this going to be bought? Because
I know, right?
Think about all the different companies and individuals who've circled this company.
Who hasn't been mentioned?
Yeah.
Well, exactly. I was talking to Paul Sweeney, recovering media investment banker for media, and I was like, if you're in this stock, why are you still in it? And he's like, you're just waiting for the $20 share bid. And it's like,
waiting and waiting.
I mean, everybody, it's pretty remarkable what we've seen. It's been sort of around the world, right?
Eventually, that story will reach its conclusion, maybe sometime soon. We'll have to keep watching that one. Let's move on to some of the decliners, though. Have to talk about NVIDIA, of course. Biggest points contributor to the downside on the S&P 500 today. Don't have a good reason why, but I will note NVIDIA, of course, has run into some turbulence over the past couple weeks. Since June 18th, this stock is down nearly 10%. And you think about the S&P 500 still hitting record highs, maybe speaks to how resilient this market has been. So that is the biggest company, one of the biggest companies out there. Let's talk about some little ones. I did want to talk about First Watch, actually, or rather, let me go back to Webtoon, because Webtoon, it IPO'd last week. It might not be familiar to our audience yet. It's an online comics company listed last week. It had quite a debut, but shares are taking a little bit of a dive today, down about 7% on the day. And we'll end with First Watch. So this is a restaurant group. You had shares fall as much as 6.2%. That's after Stifel cut its price target to a street low, basically citing concerns about foot traffic. So it's been interesting to watch that worries about the consumer, work its way into some of these specific names as well.
All right, looking at the bond market here, you're seeing definitely a bid. Yields coming down, particularly a little bit there in the back end. I mean, not a ton of news here, guys. We've seen a sell-off over the last few days, so no surprise that you might see some buying. We were talking yesterday about the 10-year hits 4.5%. Maybe that could bring in some of the buyers. We were talking, guys, to PIMCO's Tony Crescenzi, and he's like, go for the yields on high-quality bonds. They're attractive enough. It doesn't really matter when the Fed cuts rates. Don't focus on the timing. It's going to happen. Just be patient.
Okay, I want to shift gears a little bit, guys, and talk about something that's a little more close to home, I think, maybe for Alex and me and Katie, Scarlett, you two, of course. I think we all consider ourselves New Yorkers.
Kind of froze you out there, though.
Well, I live in the suburbs, so I get why he did that.
Somewhat. But, you know, you spend a lot of time in New York City. You've heard a lot about the financial constraints facing the city, and over the last 4 years, the concerns about the city's budget. We've seen closures of libraries on certain days here in New York City, trash collection getting curbed, the frequency of that. Well, it turns out for a 4th year in a row, NYC's finances are keep beating the doomsayers, and it's just not as bad when it comes to the budget as originally thought, Katie.
Yeah, the final budget is going to be $112 billion for the fiscal year that started on Monday. So the good news is that that's going to help the libraries open up again, and in addition, you know, give some of the cultural institutions back some of the money that had been part of the cuts.
And trash pickup will be resumed, and that's important, obviously, for everyone, as well as early childhood programs will recover about 3/4 of the planned $400 million in cuts that they had put in place or were about to put in place.
Is this just all taxes? Like they just made more in taxes over the last 3 years than they thought? Is that what this is?
Part of it had to do with that, but part of it had to do with restrictions that were put on limiting stays of migrants because there was so much spending on migrants in the city.
So they spent less on that, and they had a little bit more money left over.
Yeah, exactly, less than they anticipated.
Makes sense.
Okay.
Yeah.
I don't know how that looks.
You know, we talk about how this was a pretty bullish day for anyone who was long the stock market, except if you had a lot of exposure to the likes of Eli Lilly or Novo Nordisk, because President Biden and Senator Bernie Sanders published an editorial today talking about how they need to lower their the cost of their anti-obesity drugs, and if they don't do it on their own, we will do it. We will do everything in our power to end it for them. My contention on this is for people who are having a difficult time getting the prescriptions for these anti-obesity drugs, they're going to the synthetic forms, right? They're going to the compounded versions of the drugs, which are a lot cheaper than what Eli Lilly or Novo Nordisk charge.
Also, it just raises questions, and I don't actually know the answer to this, but how other countries wind up pricing drugs, because if it's a socialized medical system, is the government in essence just paying for it, in which case you're paying for it through taxes, and this is a different way of offsetting it? Like I literally don't understand how that works. So is it an apple to apples comparison? And
one of the companies that has just, made so much money from this is Novo Nordisk, which is not based in the U.S. So you wonder to what extent the Biden administration has the same power that it would have over an Eli Lilly, which is based in Indianapolis.
These are all really good points. I will say there was some interesting, a little bit of pushback from the sell side. If you take a look at Mizuho's reaction, they said that when you think about the benefits that these drugs bring and the fact that, it is an injectable, those tend to cost a little bit more. The price of around $1,000 a month actually seems very inexpensive. Obviously, $1,000 a month, that a lot of people right now can't afford that. But again, just thinking about it holistically and how much other drugs cost, it was interesting to hear a different perspective there.
Also, an editorial in USA Today is how the president and then Senator Bernie Sanders communicated this to people.
It's an election year, man.
Talking to the people.
Yeah.
Talking to the people.
It certainly is. Hey, are you guys going to be here tomorrow at same time?
We will be.
Yeah, we'll be here.
Really?
But we won't be together, but we'll be here on TV.
Yeah.
Same place, but different time.
Okay, typically what I say here on a Tuesday afternoon would be, we'll see you tomorrow, same time, same place. But we got a holiday shortened trading day coming up tomorrow. So we're going to take a little break from our closing bell coverage, but it'll be a little bit different. So we'll see you tomorrow, not the same time, but the same place. Have a good holiday, everyone. This is Bloomberg.
All right, coming up, Jessica Caldwell, head of insights over at Edmunds, will be joining us to break down Tesla deliveries, plus all the other auto sales for June that we got. We're going to break all that all down. This is The Close on Bloomberg.
every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Alex Dale. Let's take a look on where markets closed out the day. The S&P up 0.6%, closing at a record high and around the highs of the sessions. Well, volume, though, very, very light. And you can see that reflected in the VIX. I feel like it's been 12 forever. You're seeing some volatility priced on the curve for the election, but definitely not right now. A little bit into the bond market, but nothing to write home about. And crude taking a little bit of a break, was around a 2-month high. That was moving the equity market, but taking a break today, Scarlett.
All right, not taking a break today is President Biden and Senator Bernie Sanders pushing for drug makers to reduce the cost of their anti-obesity drugs. They published an op-ed in USA Today targeting Eli Lilly and Novo Nordisk. And so these are among the two decliners in today's overall up market. You have Eli Lilly losing about 0.8% and Novo Nordisk's U.S. shares closing down 1.7%. Just a point of note that at the same time, there was a separate news headline that the FDA approved Eli Lilly's Alzheimer's treatment. So that is good news, certainly for the company and from those who suffer from the disease. Tesla up 10% on the day, the best performer in the S&P 500 and NASDAQ 100. This is after it reported second straight drop in quarterly deliveries. But analysts said that the drop was not as steep as they had feared. So sales fell 4.8% for the quarter versus last year, but it actually improved on a sequential basis from the first 3 months of the year. And that brings us to our top story this hour. Tesla is trying to turn the corner. The EV leader reported sales falling, as I mentioned, for a second straight quarter. We're going to evaluate how much of this is due to Tesla-specific issues like a stale product lineup versus industry-wide issues of steep financing costs, as well as a crippling cyber attack across auto dealerships.
Yeah, but you know, Scarlett, we did see Tesla have a monster run before the close, up at 1.10%. Want to get more on Tesla's car sales with Bloomberg's Keith Naughton. Hey, Keith, is this a case of actually Tesla doing well, or is this a case of just not bad as feared?
Not bad as feared is clearly what the story is. Sales were down 5%, as you guys said. They've been down 2 quarters in a row. You know, we're in the middle of this EV slowdown, so there is this broader industry trend that is having a negative impact on Tesla sales. But as you mentioned, Tesla's lineup also is growing stale. Their biggest sellers, the Model 3 and the Model Y, are getting long in the tooth. And the Cybertruck, which is its newest model, is pretty high priced and selling in pretty low numbers so far.
We also know that Elon Musk has announced major staff reductions. He's pushed internally to reduce headcount by up to 20%. Do you think that had an impact on its actual performance?
You know, he did get rid of some salespeople, and salespeople help move the metal. So it could have, but I think these other factors probably had a bigger impact. Americans in particular are buying fewer electric vehicles because we're reaching that sort of mainstream part of the market that feels like EVs are too high priced and that the charging infrastructure isn't developed enough. And then again, Tesla's models are either too high priced with the Cybertruck starting around $81,000, or they're getting too old.
What about the broader auto market in terms of the car sales? You mentioned we get Ford tomorrow, but what have we learned so far about the overall auto market, not just EVs?
It's a little bit of a mixed bag. We expected really a bad month because of this cyber attack on the dealership.
So following the close of the US cash equities markets, just going to give you guys a quick market wrap of the session today. So Wall Street traders sent stocks to all-time highs as bond yields fell, with traders looking at prospects for Federal Reserve rate cuts after Fed's Chair Powell cited signals that the US is back on a disinflationary path. For the first time in its history, the S&P 500 closed above 5,500 to extend a blistering 2024 rally that has left analysts scrambling to update their targets. It was the gauge's 32nd record this year. Tesla surged 10% to lead gains in megacaps, though Nvidia failed to gain traction. The NASDAQ 100 hit 20,000. Data today showed that job openings unexpectedly rose, interrupting a trend that underscored a slowdown in the labor market as key for Fed easing. Powell said that there has been substantial moves towards better balance between the supply and demand for workers. He described the job market as strong, but said it is cooling appropriately. The record-setting surge in U.S. equities, driven chiefly by American technology behemoths, is once again igniting comparisons to prior boom and bust cycles on Wall Street. But parallels to the dot-com era and stock market frenzies of the past are so far exaggerated, if history is any guide.
Products, specifically not having a hybrid vehicle, for instance, where the price point is much lower than EVs.
Yeah, I mean, they're not going to get a hybrid, but I will say that, of course, a older product lineup, like Keith had mentioned, is an issue. Americans expect something fresh every few years. Having a vehicle that's been around and does largely look the same for 6 years is just not something that's done. And when you think about that mainstream market that they need to appeal to, they need visual differences. There could be software updates and some, smaller changes, but people need to see something different. And especially for those early adopters that bought Tesla because they wanted something that was the latest and greatest and coolest thing out there. Having a vehicle that is old, and especially in large metro areas, like completely oversaturated, is not something that appeals to them. So they really do have to move the product along to gain new customers and then appeal to existing customers.
I like the way you put that. They need something noticeably different. It can't just be incremental upgrades, like the difference between an iPhone 15 or an iPhone 14, better guts inside, but it doesn't look any different. I want to talk about the broader auto market overall. When we look at the kinds of cars that are moving, that people are willing to spend on, in spite of high price tags and high borrowing costs, what's the common thread here?
Yeah, I mean, that's the issue, I think, with the car market. I mean, left to their druthers, Americans want larger SUVs and trucks. We know that. However, in the land of high interest rates, that's just not possible for a lot of folks. So we are seeing people having to downsize, and that's why we've seen such strong performance for vehicles like compact SUVs. Hybrids are interesting because they are really popular right now. But when we actually look at the transaction prices, they're very close to MSRP. So if you're looking at a hybrid, sure, it may be less than an electric vehicle, but you're not going to get necessarily a deal because there's so much demand there. So I think people are just having to shift some of their preferences of what they truly want to be real affordable and more economical in this, in this financial situation.
Hey, Jessica, what do rates need to be in the economy for car sales to make sense, even at a higher price point?
Well, when we saw, rates are going to change according to, your credit score. But when we saw more incentives, and automakers were really good at this pre-COVID, offering things like 0% financing for 60 months, 72 months, and at the start of COVID, 84 months. That really moved the metal. I don't say that's necessarily a healthy business practice across the board, and especially for prolonged periods of time. But when you saw interest rates that were averaging below 5%, I would say that people felt a bit better overall. There's still folks with bad credit that are, paying much higher interest rates. But I want to say when you can get people in at, something promotional under 3, that's when people start to take another look at your product. And any automaker that is running an offer right now with low interest rates and for an extended APR, not something for 36 months or 48 months, because that's too short for most people, they're definitely going to get more eyeballs than they did in the past.
Wait, is that actually happening? Because that's a good deal.
Not in a lot of places. I mean, you will see pockets of the market in which you are seeing lower APR offers. But to get a 0% loan for 84 months, we don't see that. But there is a small percentage for 0% happening. It's just at a shorter time period. So you're going to get a much higher monthly payments, which we know Americans are not fond of.
We know the Chinese EV space is thriving, and those car makers are selling, and at certain points they overtook Tesla. As an American, though, we don't have access to those vehicles. We know that the administration has been pushing back against that, proposing 100% tariffs on some of those Chinese-made EVs. In what way does that influence the offerings that are available to Americans?
Well, I mean, I think that is sort of that, interesting point is that people see these, BYD vehicles for $10,000. I mean, it won't necessarily come to the United States for that price, especially when you look at crash test regulations and some design regulations. That's not necessarily going to happen. But we do think that there's obviously an appetite for lower price EVs, but the quality has to be in balance, because when we look at what Americans want, they don't want a small econo box with no features. Mm-hmm. We like all the bells and the whistles and the gizmos and the gadgets and all of that. So the vehicle still has to deliver on quality, but also content too. So it is that fine balance between something that is cheaper but offers all that too. So I think what people are looking for is sort of that value messaging of getting a good price but also getting everything that you want and not making compromises on that
At
front.
4:30 p.m. Eastern Time, we get our weekly US API data. Crude oil stock change forecast a draw of 0.15 million on the prior build of 0.9 million. Cushing stock change prior a draw of 0.3 million. Distillate stock change prior a draw of 1.2 million, and gasoline stock change prior a build of 3.8 million. Bear in mind we do get this data from public sources, so it can be slightly delayed.
Definitely be in trouble if that happened, and people that would be interested in EVs but need a cheaper vehicle are going to be onto the used market, but that would be a big detriment to lose that tax credit on especially on the new side.
Yeah, really well said. Jessica Caldwell, head of insights at Edmunds. Alex, I know you guys drive on the weekends sometimes to Massachusetts. Would you ever buy an EV?
Yeah, we definitely think the next car will be an EV, but we need to manage.
How long have you said that, though? The next car will be an EV?
No, just one car ago. Okay. Because we just need the range thing, and also in Massachusetts it's so cold, so we need to make sure that the battery cannot die.
Right.
But we're definitely interested in it. Maybe
I think that's the way I feel too. Like, definitely interested in it, but I don't have a garage, so how do you charge this thing? And the range anxiety is a big deal. Yeah. I definitely don't want to be caught out not being able to charge that thing, which is why when I need to rent a car, there's no way I'm renting an EV. It's just one too many things to worry about.
Yeah, no, that's a fair point. But I'll ride in them in an Uber.
Yeah, for sure. Once I figure out how to open the door and close the door.
Yeah, it's an ongoing
separately. Coming up, we've got the top three, where we focus in on the top three movers and shakers at the center of the day's big stories. This is The Close on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. Jobs Day, and Bloomberg has the report under surveillance.
The job market is quite strong.
There's no major job losses. The economy is still chugging along.
This Friday, Bloomberg will bring you crucial data and expert analysis at terminal speed.
We have a labor market that is not inflationary.
Perhaps some cooling is in front of us.
We're now starting to move into the more normal stage. There's a lot.
At 4:30 p.m. Eastern Time, we get our weekly US API data. Crude oil stock change forecast a draw of 0.15 million on the prior build of 0.9 million. Cushing stock change, prior a draw of 0.3 million. Distillate stock change, prior a draw of 1.2 million. And gasoline stock change, prior a build of 3.8 million. Bear in mind we do get this data from public sources, so it can be slightly delayed.
It helps that he helped the Celtics win the national championship.
Oh my God.
And Moody's ratings on BlackRock outlook changed to negative.
Yeah, good linking of the news.
So Moody's ratings affirms BlackRock's AA3 rating outlook is negative.
He signed, right? So he's going to be there. That's part of the appeal of the club. I mean, this is the fourth most valuable franchise in the NBA after the LA teams, after the Knicks and everything. But this is a team that has won the national championship, and they're going to make sure that they can hold their core together. And this new contract ensures that Tatum will stay there through his prime.
All right. Well, let's stay with money. Steve Ballmer, former Microsoft CEO, is now the sixth richest person in the world, passing Bill Gates. Apparently, more than 90% of Ballmer's $157.2 billion net worth is in Microsoft shares. This is according to the Bloomberg Billionaires Index. I did not know that.
He is highly, highly, highly exposed to Microsoft in the market.
But about half his wealth is held through Cascade Investment, and that was created with the proceeds of Microsoft stock sales and dividends.
That's Gates, I think. That's Bill Gates.
That is Bill Gates, as it says in the story.
Right.
You're absolutely right.
No, but what's interesting, of course, is that the former CEO of Microsoft is wealthier than the co-founder of Microsoft, which, you would have thought the co-founder would be at the top of the heap, but he cashed out a lot of that.
He did cash out.
So, and also he is part of the Giving Pledge, where they have to give away most of their wealth. Warren Buffett signed it.
Mm-hmm.
Steve Ballmer notably did not sign that.
Interesting.
Yeah, he has other philanthropy efforts, but nothing like
not
the Gates
that
Foundation.
part. Mm-hmm.
Not that part, exactly. All right, third on the docket is Jay-Z. The hip-hop musician became the latest celebrity backer of the online watch market by taking an equity stake in luxury trading platform WristCheck. This is based in Hong Kong, and what we can tell you is that WristCheck targets buyers and sellers of high-end wristwatches in Asia and also provides authentication services to root out fakes. When I lived in Hong Kong, every banker there seemed obsessed with making sure that they got a really nice watch. And I couldn't figure it out, but I think a lot of it is tied to the fact that Hong Kong's a duty-free port, so you don't have to pay taxes on those fancy watches.
But I don't think it's even just Asia. I think in general, like the watch market, luxury watch market, and the resale market, even in a downturn, is still relatively hot. Even if the prices come down, that resale market's huge.
No, that's a good point. I'm talking about junior bankers, though. Everyone was like, oh, I'm going to get a nice watch.
Oh, okay. Like you're not making $1 million. All right.
Yeah, there you go.
Let's stay with luxury here. Glenn Fogel, CEO and President of Booking Holdings, will be joining us next. This is Bloomberg.
This is Bloomberg.
Shortly expecting the results of the US API data, I'll lead with the crude oil stock change.
From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
$32 million. That is how many people the Transportation Security Administration is expecting to screen at U.S. airports during this July 4th holiday period. That's up 5.4% from last year. And this is music to the ears of companies like Booking Holdings that already was forecasting a pretty solid year after a pretty solid first quarter. Their top and bottom line beat in the first quarter, and they were talking about the strength of international travel. So does this trend actually hold? Glenn Fogel, CEO and president of Booking Holdings, joins us now. Hey, Glenn, some analysts called your forecast for this year conservative. You had pretty good guidance. What's your clarity for the back half of the year as we enter the summer?
Well, you know how we are. We're talking end of the quarter, so I will stay where we were with what we said in our last earnings call. But certainly the numbers you put out were good. You're talking about July 4th weekend. People are going to the airports. They're traveling in the States. Of course, we're very global. So, you know, it's great having a good July 4th, but you got to think what's going on elsewhere.
Yep, and what's going on elsewhere, a lot of the action is over in Europe. Bernstein in particular talked about the Taylor Swift effect and that you, among other companies, would really feel the effect in Europe as she toured. Have you noticed increased activity around Taylor Swift tours?
Well, you can notice it when she's performing in a smaller city. You can see the cost of a hotel going up. You can definitely see it more easily than a large city. I think she's performing tomorrow, I think, in Amsterdam. I didn't look at the numbers, so I'm not sure. I was in Amsterdam last week. I should have stayed. I came home Friday.
Yeah, it's one of those things that after last year, which kind of surprised people, including members of the Fed, how much Taylor Swift moved the needle in different local regions, that people are now anticipating the effect that she'll have on not just those cities, but on companies that, you know, offer travel services as well. I want to ask about the Olympics, because obviously Taylor is going to perform in Paris, and you also have the Paris Olympics there. Do you notice any is there a meaningful bump from the Paris Olympics, either before it or after it?
Yeah, it's interesting. And I've been in the company now over 24 years. And it's interesting to see the Olympics each time, people thinking there's going to be this huge amount of people traveling to that city. But the effect is actually a lot of people who normally would go to that city decide not to go. So right now, you may have seen Air France came out with a news piece, I think yesterday morning perhaps, talking about actually less people going to Paris than they thought were going to go. Because, of course, unless you're going to the Olympics, you say, why would I want to visit Paris during the Olympics? And that's an effect.
Yeah, that's true. I mean, it's always a great time to visit Paris, but maybe not during a crunch time. Alex, I know that you follow EU regulation from the time when you're covering the European close, and anytime there's regulation, the EU is ahead of the curve over the US, especially when it comes to digital privacy and digital competition, ensuring there's sufficient competition.
Lots of sticks, not a lot of carrots. And Glenn, that definitely, you've been in the middle of that. New EU digital rules have kind of forced it to allow hotel companies to offer lower prices, not just on your website. Have you noticed the effect of that? What's that transition like right now?
So you're talking about the Digital Markets Act, the DMA, and one of the things it got rid of was a thing called price parity. And the issue had always been, this is an agreement with us and our hotel partners coming up with a way to make sure that we would have something in partnership the DMA says that you cannot have this price parity. So now there's more competition according to the DMA. Look, we are absolutely fine with following whatever the rules are, and we will compete as vigorously as we always have. There have been countries in Europe that have had rules that say you can have parity in the past. So in those countries, we would have seen an impact. We really didn't see much of an impact, so I'm okay with it.
All right, we got through July 4th, Taylor Swift, Olympics, and digital rules. Give me some broad strokes. Where are people going? How much are they willing to spend right now?
Well, where they're going depends on where you're from, of course. United States, some interesting stuff. It's summertime. People want to go to the beach. Some of the numbers I've been seeing, places like Myrtle Beach, Ocean City, Destin, obviously all beaches, Panama City. And then they're the favorites, Las Vegas. People always want to go to Vegas. People are still going to Vegas, and people are going to continue to go to Vegas. Those are the popular things. U.S. people going outbound, they may be skipping Paris, but Barcelona, for example, up 70% year over year. That's an interesting number to see. Obviously, London, always a popular place for Americans. The big long-term thing is always is if GDP goes up, travel goes up more. And I think in the long run, this is a great industry to be in because we have seen decade after decade more travel, and it's just good for us.
Yeah, especially since you have a strong U.S. dollar as well. That's certainly a tailwind for any American going abroad. I'm curious to get your take on this idea of coolcations, where people are going to places that are not as hot, especially with climate change raising temperatures around the world. They're looking for locations where you can stay cool. I know San Francisco, for instance, has really marketed itself as the coldest summer that you've ever spent, being in San Francisco as opposed to being in another part of California.
Yeah, no, there's no doubt about that. And interesting, in Europe, you'll see that where people are trying to promote Scandinavia. It's cooler up there than it would be, say, the south of Spain. So there's definitely that. People are always going to try and market. What do they have that's a differentiator that people will want? And there's no doubt whether being in, going to San Francisco in the summer is definitely going to be cooler than being down in LA in the summer. So certainly that's the way people are going to market it. Myself, there are always interesting places to go. And if it's too hot, there are places you can go indoors to be cool for a while.
Yeah, very well said. I want to get your take also on Bank of America publishing a report that highlights companies that are candidates for splitting their stock. I know you'll be reporting your earnings August 1st, and so you can't say anything to the effect of whether you would split your stock or not by that date, but I'm curious to get your take on what it means to have a lower per share price in terms of attracting individual investors, because it doesn't actually change the valuation, but it may look like it's cheaper to those who want to get in on just a couple of shares.
Yeah, I have to agree with you. Slicing up the pie into more pieces does not make a bigger pie. That's absolutely true. Now, there is some psychological impact for some people. I've heard that. I've looked at the finance studies over many, many years. Long term, it's not going to make much of a difference. One issue that could make a company want to split is because their employees see it differently. So if you're giving out equity and you're giving a person just one share, or even when our share where it is, it's, you have to round off. We're up close to 4,000. You have to figure out which way we're going to round on that. It's not a big deal. In addition, and this is something that was not around when I was in banking, but fractional shares are easy to buy in the U.S. If somebody doesn't want to buy a full share or doesn't want to have a round number of shares, it's easy enough at many of the platforms to buy fractional shares.
Oh, that's a really good point. I hadn't thought about the employee angle. Fantastic context. Glenn Fogel, really appreciate your joining us today, CEO and President of Booking Holdings. Happy 4th of July to you. And it looks like Glenn is staying in New York for now. He runs Booking Holdings, but he's not necessarily traveling too far, at least at the moment. For those who are driving, there's some numbers on the latest car sales and a little bit less robust than what people anticipated.
Oh, nice segue. Look at what you just did there. Yeah, you're taking a look at U.S. light vehicle sales coming in at 15.29 million. The estimate was for 15.8 or 0.9, depending on which survey you're looking at. So definitely a disappointment there. I think we get Ford tomorrow, so that will also be kind of interesting.
Yeah, absolutely. So if you take a look at what happened during the close, Tesla was a little bit of an outlier in that it was consistent with the idea that sales slowed, but it was not as bad as anticipated. So the stock went on a tear, up 10%, the best performer in the S&P 500, the best performer in the NASDAQ 100. Crude oil oil has had a really interesting move today, right? At one point it was at a 2-month high, but then it flipped it completely.
Gave up a little gains. Yeah, we have to see if we can continue, though, the strength that we've seen. Some saying it's really actually demand at this point, which is a big flip from what we've seen a couple months ago.
All right, and the S&P 500, record high, yawn. It seems like that happens every other day.
32 record highs now for this year.
Track. This is the close on Bloomberg.
So crude coming in at a draw of 9.163 million, a draw of 9.163 million. Cushing, a build of 0.404 million, a build of 0.404 million. Gasoline, a build of 2.468 million, a build of 2.468 million. And distillates, a draw of 0.74 million, a draw of 0.74 million.
Also, an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Calls for President Biden to withdraw from the presidential race are picking up, with House Democrat Lloyd Doggett saying instead of reassuring voters, the president failed to effectively defend his many accomplishments and expose Trump's many lies. Joining us now is Bloomberg's Joe Matthew, co-anchor of Balance of Power. Joe, was this a surprise for Democrats to start to break ranks like this?
Not so much, and so far it's one Democrat, I guess, to be technical when it comes to Congressman Doggett here, a member of the House, just sort of saying out loud what everybody else is saying behind closed doors for the most part. We talked earlier with Congressman Seth Moulton, who's a Democrat from Massachusetts, who I'll remind everybody actually ran for president in 2019 and 2020. Didn't get very far in that exercise, but he's been seen as kind of a new generation of leadership here. He also ran for House Speaker at one point, a combat veteran. He acknowledged this. He didn't have anything, while he supports Joe Biden, to say that really turned this conversation around. He made it clear that some very difficult conversations are being had right now, and they frankly have not figured out exactly what to do. I would point you to this Friday interview that Joe Biden has agreed to do with ABC News. It's going to be conversations like that that help determine the way forward.
Oh, wow, because the president has not had those kinds of interviews at all, right? If anything,
Right.
They've really been careful about making sure that he speaks to media in a very controlled environment. Like, it's not kind of an off-the-cuff thing that he does regularly.
Yeah, and frequently with a friendly audience here, and we see this on both sides of the aisle. You talk to the cable news network that matches your political profile. Joe Biden did a 60-minute sit-down, but he hasn't held a lot of off-the-cuff live interviews, certainly, and he doesn't do a lot of news conferences. We don't see this president in the East Room pointing to a forest of hands, answering questions from reporters. It hasn't been the style of this White House, and it might be something that changes.
Going to the other side here, former President Trump, and sort of moving forward after the Supreme Court immunity case yesterday. What's been the follow-on that?
Well, my gosh, quite the day for Donald Trump here. I suspect he didn't imagine that he'd get this headline when he woke up this morning. But the sentencing in the New York hush money case, this is the Stormy Daniels trial that brought us to Lower Manhattan for many weeks on end here. That was scheduled for next week, the 11th. It has been postponed, and we have a new date, September 18th. And that is because of the fallout from that Supreme Court ruling yesterday, calling into question whether it's possible to charge a president for anything that he's done in his official capacity, or she in the future tense here when it comes to the presidency. That means that Donald Trump will be sentenced after the two political conventions and after a second debate, if there is one. It's scheduled for September 10th, and I have to be honest, after last week, it's unclear whether that's even going to take place.
Yeah.
All right, good stuff. Bloomberg's Joe Matthew, thank you so much for giving us the full backstory here on what's going to happen moving forward when it comes to the presidential election and the positioning after that Supreme Court decision. I want to bring in some headlines here on Apple. It is set to get an OpenAI board observer role as part of its partnership with OpenAI, their AI pact. Apple veteran Phil Schiller will take that OpenAI board observer role. So again, Apple will get an observer role on OpenAI's board as part of its agreement that it announced last month, further tightening the ties between two companies that early on people didn't think would be teaming up in any way.
Yeah, no more frenemies.
No more frenemies, at least for now. But, you know, this is tech, so
who knows?
It could change very quickly. All right, let's move forward with our Muni moment right now, because a nonprofit known as Texas Biomedical Research Institute worked on the first vaccine for COVID-19 and a treatment for Ebola. Now it wants the municipal bond market to help it prevent the next pandemic. Joining us to explain is the CEO of Texas Biomedical Research Institute, Larry Schlesinger. Larry, thank you so much for joining us today. Really appreciate your taking the time to speak with us. Your organization actually sold bonds 3 years ago in 2022. How does tapping the muni bond market help you further your institute's mission?
Well, thank you very much, and good to be here. We're a nonprofit research institute in San Antonio, Texas, and we were founded in 1941. And really, we operate as a global infectious disease research institute with a very interesting model where we do fundamental research, but we also are able to work with a number of partners in a regulated science way to produce new countermeasures to infectious disease threats. During the pandemic, we actually accelerated our growth in the national and international markets by the work we did, as you mentioned, with Pfizer and Novavax vaccine, with the Regeneron monoclonal antibodies, and our longstanding work with Ebola. We're an organization that can bring that science right up to the pre-IND, IND stage. And as a result of our diversification of our business model and our ability to work nimbly and safely in the infectious disease space for so long, we need to modernize and grow our campus. And these investments become critical in increasing resilience and increasing capacity so that we can better face the next pandemics that we notoriously will have.
Where does the money come from to service these bonds, and how predictable is that money?
So the bonds come from diversified sources, and from our underwriters and the folks we've worked with. We understand that the market was hot and that we had 3.5 times the number of investors interested in this particular option relative to our needs. So this is really taking a critical look at end markets for infectious diseases, which are growing. Infectious disease is predicted to be the #1 killer of humans by 2050. And the time to really operate on building
Seeing reports that China is building and testing lethal attack drones for Russia. So the drones are modeled on Iran's Shahed, could constitute lethal aid.
Really appreciate your explaining all of this. Larry Schlesinger is the CEO of Texas Biomedical Research Institute, tapping the muni bond market. He runs the nonprofit, and of course, they have a lot of experience with COVID vaccines and Ebola vaccines. Still ahead, what investors need to watch for tomorrow. This is The Close on Bloomberg.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time. Hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
And we were telling you about our breaking news earlier where Apple is set to get an OpenAI board observer role as part of its AI pact with that company. Let's bring in Bloomberg's Mark Gurman, who broke the news, to join us for more context. It's remarkable. Apple had absolutely no AI a few months ago, and now it has a board seat on OpenAI, albeit a passive board seat.
Yeah, yes, to be clear, it is a board observer role, and this person is going to be Phil Schiller. That's an Apple fellow, that's his title. He's the head of the App Store and the head of Apple's product launch events. He was previously, for well over 2 decades, Apple's marketing chief. He worked extremely closely with Steve Jobs on turning around the company. He was known as the biggest protector of the Apple brand, introduced the vast majority of Apple products over the past decade plus. He stepped down from that marketing role at the end of 2020 to take on just this App Store and events role, but he's still one of the top 5 to 10 executives at the company, strong believer in Apple's approach to privacy, wants to protect Apple's brand and make sure they're in business with the right partners. And specifically, you've seen some tumultuous times at OpenAI, right? And so it would make sense for Apple, with such a critical partnership, to want someone in the room to understand some of the decision making. So it would make sense that Apple want that as part of this ChatGPT integration and Apple Intelligence. And of course, like I said, that man is going to be Schiller, the former head of marketing at
Hey,
Apple.
Mark, is Microsoft going to like this?
That's an interesting one. So Microsoft obviously has a revenue share agreement with OpenAI. They made a multi-billion-dollar investment several years ago with OpenAI, and OpenAI's infrastructure, or OpenAI's technology, runs on Microsoft infrastructure and really powers, the vast majority of AI features on Microsoft's platforms.
Now, this is going to be interesting. There are going to be plenty of board meetings that talk about confidential information related to OpenAI and Microsoft's future products and initiatives. And of course, Microsoft would not want Schiller, who represents one of their top competitors, in those meetings. So we'll have to see how that goes. But typically in those cases, board members or observers oblige and exit the room for those types of discussions.
Hey, Mark, we really appreciate it. Thanks a lot. Bloomberg's Mark Gurman on his scoop on Apple having a passive seat on the board. All right, coming up, we have Jamaica bracing for hours. Heavy rain, wind gusts, 155 miles per hour. It could be as much as $1 billion in damages. Hurricane Beryl is barreling across the Caribbean. Want to get more with Brian Sullivan. He covers the storms for us for Bloomberg. Can we just walk us through how bad this could actually be and what we should be focusing on in the next 24 hours?
So Beryl is going to be a major hurricane by the time it gets to Jamaica. It may not be a Category 4, maybe down to a Category 3, but that doesn't really matter. It's going to be pushing a huge storm surge into the southern coast of Jamaica, and along with that, some really heavy winds. So there could be a lot of damage right along the coast especially, but inland as well. And if there's even a little jog in the track, Beryl could go right over the island, and the price goes up from there.
It feels really early to be talking about a Category 5 hurricane so far this storm season. What does it say about the power of upcoming storms?
Everyone is frightened by that. You saw Swiss Re and Munich both took hits today in their stock price because people are afraid what the rest of the season is going to be like. This part of the Atlantic doesn't usually get active until mid-August, and here we are in July. Actually, Beryl was born in June, so, we're months ahead of where we should be.
Yeah, pretty scary stuff. All right, thank you so much. Brian Sullivan, who covers climate change and the weather for us. Of course, we're keeping an eye on Hurricane Beryl and the damage that it's wreaking right now across the Caribbean. All right, let's take a look ahead to what we're watching for tomorrow, because it is a half trading day in the U.S., but there's still plenty of data for investors to parse through, starting with earnings.
Yeah, we get Constellation Brands. I mean, beer sales, straight up. What are beer sales?
Appropriate for July 3rd.
Right? What are costs doing? What the demand is?
All right, so we'll keep an eye on, the sales of Modelo, for instance. We also have economic data. There's the weekly mortgage applications. That's a weekly thing on Wednesdays, but also some Thursday data pushed up.
Yeah, we got initial jobless claims. That could be quite interesting, particularly ahead of jobs on Friday. And then after the JOLTS number, which surprised to the upside, but then underneath it, it was really just about, say, government workers and those jobs opening that did really well. The private area in the JOLTS, what didn't. So that'd be interesting to see how that read-through happens.
And there's also some ISM numbers as well, right? Services, which is the biggest part of the U.S. economy, not to mention factory orders, although we know the manufacturing economy is, in contraction mode. And durable goods, which tends to be pretty volatile. And we mentioned half day of trading. Actually, for a change, equities will be closed before the bond market.
Totally shocked. Did not know this was happening. Right? Really blew my mind. Right, so equities close at 1 p.m. The bond market closes at 2 p.m. because at 2 p.m. we get the FOMC meeting minutes. So we're going to be covering that for you right here on Bloomberg Television. Scarlett and I will be here from 12 until 2:10. So just definitely stay with us for that. I wonder what we're going to be looking through in the tea leaves for those minutes.
Yeah, well, Mike McKee will be joining us. And of course, there's a lot of, we need to have the confidence to to cut rates, not raise rates. We need to have the confidence, and about policy being plenty restrictive at the moment. And of course, setting you up for tomorrow's trading day, we closed at a record high, so we'll see if those records continue.
32 record highs so far this year, but without the fanfare, the melt-up, as you called it. I think that was a brilliant way of phrasing it. Melt-up, absolutely, 100%.
No one's wearing any
What's leading
hats
it
today.
Yes,
right.
No streamers.
That does it for us. Balance of Power is up next. Have a great evening. This is The Close on Bloomberg.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Sentencing in Donald Trump's hush money trial in New York is delayed until September, following the conventions and a second scheduled presidential debate.
This as President Biden pulls in $127 million in the month of June, $38 million of that since his debate performance last week, despite calls for him to drop out of the race.
We'll bring you new polling in the race from Cliff Young at Ipsos, and we'll talk with Angela Stentz of the Brookings Institution ahead of another important test for President Biden, next week's NATO summit here in Washington. Thanks for joining us on this Tuesday. Live from Washington, we begin with the fallout from yesterday's Supreme Court ruling on presidential immunity. Donald Trump's sentencing in his New York hush money case delayed from next week now to September 18th after he requested to have his conviction in that case overturned. Let's go now to Bloomberg's Sarah Forden for the latest on this. Sarah, welcome to the table. It's great to have you. How could this move so quickly? The ruling at 10 o'clock yesterday morning and now this.
Yeah, Trump's lawyers wasted no time in making their filing to have this case thrown out. Basically, they had to ask the judge for permission to file a motion to have the verdict thrown out. And now the judge has accepted that and will set a hearing in order to parse the questions that have been raised in this case by the Supreme Court's immunity ruling.
Well, of course, the questions that have been raised not only pertain to what is an official act versus an unofficial private act, but also the way in which official acts can be used as evidence or anything done in a presidential capacity. Could that be potentially what trips up this already decided case where a verdict has already come down, but potentially some of that evidence may be in question?
So that is exactly the point. So the judge is going to have to review if there was evidence introduced before the jury that were part of his acts as president. So some of the issues they'll be looking at are tweets and social media posts that he made as president, testimony from White House staffers, and some of his financial filings. But in fact, the bulk of this case, as we know, involved actions that happened well before the election because it was about his effort to tamp down the story, so it wouldn't compromise his election. So But all of this now has to be parsed. The judge is taking it very seriously. We're going to have filings from Trump's team next week on July 10th, where they will lay out, their issues, and then the prosecutor, Bragg, will then respond to those at a later date. So it's now a whole new dimension of this case that is unfolding before our eyes.
We heard from the president on this Supreme Court ruling, Joe Biden addressing what we heard from the Supreme Court in a late speech from the White House. He spoke just before 8 p.m. Here's what he said.
I know I will respect the limits of the presidential powers I have for 3.5 years, but any president, including Donald Trump, will now be free to ignore the law. I concur with Justice Sotomayor's dissent today. Here's what she said. She said, in every use of official power, the president is now a king above the law. With fear for our democracy, I dissent. End of quote. So should the American people dissent. I dissent.
Well, it's interesting in this case, Joe Biden, of course, may not be president come November. If Donald Trump is sentenced in September, and let's say that includes an ankle bracelet or some level of probation, would he then carry that with him into the White House? Would he be meeting with a probation officer, or would that stop at the White House gates?
Well, now with this new wrinkle of the immunity question, it's also possible that if Judge Merchan decides to go ahead with the sentencing, he would then, it could be adjudicated on appeal and addressed on appeal. So it's very unlikely that a sentence will actually go into effect in the near term, and if Trump is elected before he, gets into the White House. So obviously, we still have to see how this case evolves, and there are a lot of surprises along the way. But most experts who are watching this aren't thinking that there's actually going to be a sentence in effect if he gets into the White House. It could be suspended. It will be addressed on appeal. So,
and of course, all of that is just this New York case.
Right.
The Supreme Court, at the heart of it was about the case against him here in Washington. We'll have to see how Judge Tanya Chutkan handles that going forward now that it's been remanded down to her. Bloomberg's Sarah Forden, thank you so much for joining us. Meanwhile, Bloomberg reporting that President Biden will convene a Zoom meeting tomorrow with Democratic governors, including several rumored as potential replacements for the nomination, like California's Gavin Newsom and Michigan's Gretchen Whitmer, as he tries to close ranks after his poor debate performance last week. White House Press Secretary Karine Jean-Pierre briefed the media for the first time since then this afternoon.
We understand. We're not taking away from what you all saw or what the American people saw. We understand. It was a bad night. It is not uncommon for incumbents to have a bad night on their first debate.
She also said President Biden will speak with Senate Majority Leader Chuck Schumer and House Democratic Leader Hakeem Jeffries this week after one Democratic lawmaker broke ranks. Congressman Lloyd Doggett of Texas today making news, calling on Joe Biden to step aside in this race, writing in a statement, quote, I represent the heart of a congressional district once represented by Lyndon Johnson. Under very different circumstances, he made the painful decision to withdraw. President Biden should do the same. While much of his work has been transformational, he pledged to be transitional, unquote.
Of course, while President Biden fields questions about his fitness for office, he is still carrying out his presidential duties, and he's set to hold a press conference next week as Washington hosts the NATO summit. Russia's war in Ukraine and U.S. support for Ukraine will be chief among the topics discussed as world leaders gather. Here's Secretary of Defense Lloyd Austin after meeting with Ukraine's defense minister earlier today.
As we look ahead to the NATO summit next week, Rustam, we'll take steps to build a bridge to NATO membership for Ukraine. Just weeks ago, President Zelensky and President Biden signed a crucial 10-year bilateral security agreement. And that reflects our strong and enduring support for Ukraine.
Bloomberg's Nick Wadhams is joining us now for more. He leads our national security coverage from here in Washington. So, Nick, we heard the defense secretary there talking about a bridge to NATO membership for Ukraine. Are we likely to see tangible steps in that direction take place at this meeting next week?
No. So what's happening here is if you listen to that language, a bridge to membership, that in itself is a significant walk back from what the U.S. and allies had said before, and also what Ukraine wants. Ukraine wants a very specific plan, essentially a roadmap to membership. There has been a lot of debate and a lot of conversation behind the scenes among allies, NATO countries, about what they can tell Ukraine. And right now the answer is essentially they can't really say very much. So when you hear this language, a bridge to membership, I mean, that can mean almost anything you want. What they're essentially saying is, yes, we still think Ukraine should be a member of NATO at some point, but right now we're not going to give you a time frame, we're not going to give you a roadmap, we're not going to give you a way forward to how this goes. We're just telling you we want to do it, but we're not giving you any guarantees.
This summit comes at a peculiar time here for politics in the United States, never mind, say, France.
Yeah.
How do our allies in Europe have long-term conversations with Joe Biden, considering the one that's being had here at home?
Well, the answer to that is, again, they don't. I mean, there is the huge cloud looming over this summit, which is the possibility of a Donald Trump election. What we're hearing from the Trump
New Zealand Prime Minister Christopher Luxon to visit United States from July 9 to 12.
To NATO would be, okay, we are not going to back out of NATO if Donald Trump wins, but we're not going to offer those security guarantees to countries unless they pay up, unless they meet that 2% of GDP target for defense spending. Of course, that's a kind of conversation that would completely roil the dialogue and the conversation we're going to see next week. So, I mean, the most interesting thing to me about this summit is this was a summit that was really meant to demonstrate will, demonstrate support for Ukraine, demonstrate resolve in the face of the Russian invasion. What you're essentially seeing is exactly the opposite. These leaders are not really going to be able to agree on a path forward for Ukraine. Joe Biden is hobbled by the debate performance. Emmanuel Macron hobbled by election results in France. So it's going to be a very shaky meeting.
And you're potentially going to have turnover, switch in power in the UK government after their election that comes up on Thursday. So it's a lot of world powers having power shifts within them all at once, perhaps. To what extent, as well, is this NATO summit about Russia as much as it is about those that are helping Russia, say China or others in this so-called axis of evil, as some have described it? To what extent do those feature into the NATO meeting?
Well, I think what you're going to see is obviously a message toward Russia saying, look, we want to project this aura of resolve, that Russia should not continue with the invasion, though it shows no signs of being deterred, but also a message to other countries, specifically China and Iran. Listen, do not continue to aid Russia in its invasion. The problem there is that we just see no sign that either China or Iran is interested in listening to that message. In fact, everything we're seeing is that China's cooperation with Russia, for example, is only deepening. So, again, a huge challenge for these leaders. In some ways, the summit comes at just the wrong time for them, so we'll have to see how it goes.
Sure sounds like it. You've got an interesting week coming up. Stay in touch with us. Bloomberg's Nick Wadham's at the table here on Balance of Power. Coming up, we turn back to the future of the Democratic Party and the reaction to President Biden's candidacy. Following last week's debate, we have new polling. Cliff Young, Ipsos polling president, will share with us next on Balance of Power, Bloomberg TV and radio.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
I was giving him about a 1 in 3 chance before the debate. And now, it's certainly longer odds than that. Democrats is a soul-searching time. They don't want to hurt him. They like him. But at the same time, they don't want to go down. They shouldn't want to go down with the ship.
It's Charlie Cook, of course, the man behind the Cook Political Report, talking with us at this time yesterday on Balance of Power on Bloomberg TV and radio, as Americans size up the impact, or try to, of last week's presidential debate. It's been an ongoing conversation on this program, so far largely anecdotal, and we put numbers on it now with Cliff Young, the president of Ipsos Polling. Cliff, it's great to see you. Welcome back to the table. As I mentioned, been a lot of talk about this, not so much research, with the exception of a couple of snap polls. What are you learning about people's ideas, knowing that this age issue was already alive and well before the debate?
Now, we have 3 polls, one pre-debate, right before the debate, one right after the debate, and one today. A general poll of the national population. Mm-hmm. And we found several things. First, everyone agrees that he did not do well. That is, Biden did not do well in the debate. It doesn't matter what poll it was, what measure it was across the board. It was really a poor performance. Indeed, our wording was terrible. 73% of those that watched it said it was a terrible performance. Wow. And so there's no sort of disagreement there. That said, we are not finding an impact on the primary political outcomes that matter. Voting intention, favorability scores, approval ratings. So thus far, everything's changed, but nothing's changed.
How about that?
Okay, so maybe you're not seeing any real change in polling, but certainly you're still seeing plenty of fretting on the part of those in the Democratic Party. You have also found in this 1 in 3 Democrats think Biden should quit the race. That's not an insignificant number, 33%.
Yeah, that's a chunky number. Now overall, 56% of Americans think he should step down. Mm-hmm. A chunk of that obviously being driven by Republicans. 1/3 is a lot, but he still controls the base. Right now, things can change over the next few weeks, and we will have to see. But today, he still garners a majority support among Democrats.
Mm-hmm. I'd love to ask you about some of the names that we're hearing about here. But the reaction to this debate, to your point, is one that is not up for debate. We even heard from the White House today about how difficult this was. Congressman Quigley was, for instance, speaking about this earlier. I think this was on MSNBC. Do we have that? It was on CNN. Thanks. This is the congressman, a Democrat from Illinois. Let's listen.
We have to be honest with ourselves that it wasn't just a horrible night. But I won't go beyond that out of my respect and understanding President Joe Biden, a very proud person who has served us extraordinarily well for 50 years. But it's his decision. I just want him to appreciate at this time just how much it impacts not just his race, but all the other races coming in November.
Well, for whatever that's worth, it's another voice we heard from Congressman Seth Moulton on earlier today. It talked about the active conversation that's being had, and we have now a Democratic congressman from Texas calling for Joe Biden to drop out of the race. So the question then becomes, well, who else? And I don't keep hearing the name Kamala Harris in that conversation. How about you?
Oh, we actually tested her in our poll.
Sure did.
And she actually does pretty well. And I think, reflecting on it a bit, to what extent, we don't know, obviously, but to what extent might there be a rally around the banner effect? In other words, independent of the name, could basically the base step up and support whomever is there if he were to step down? We don't know that. That's something that's unknown at this point, but it's something interesting to reflect on.
Yeah, this kind of question is, does it matter who the other option is if it is another option, which so many have signaled in polling and otherwise they're begging for, that they don't want the choice between Biden and Trump. They want a different choice. So could that be one that they select as another Democratic nominee? But there are also technically different choices out there. Cliff RFK Jr., for example, Cornel West, Jill Stein. Have we seen any transmission from the debate performance into the polling, the way that these third parties are polling, or are Americans not really seeing them as viable alternatives?
Now, we would expect a weakening on the edges, Biden losing a few percentage points here or there. They could migrate to one of these third-party candidates. We would expect that. I wouldn't expect it to be permanent. It would be a temporary fix, let's say, until those voters find someone they prefer or step out completely and they ultimately decide not to vote. But yes, they're still in the mix. We still don't understand how that will all behave, and we have to wait and see.
We keep hearing names like Gretchen Whitmer, Gavin Newsom. Those names were being spoken out loud the night of the debate while we were still in our post-debate coverage here. But they don't come close to the president or the vice president based on what you...
Yeah, they're depending on how you ask the question, they're 3, 4, 5, 6 points out from Trump. But a lot of that is name recognition. We have to understand that Donald Trump today has 99% name recognition. Most of these other candidates, these Democratic candidates, are in the ballpark of 50 or 60. Perhaps that's something that could be resolved or zeroed out during the campaign, but they do have a name recognition disadvantage at this point.
Although if you're, say, Governor Gretchen Whitmer of Michigan, you have probably very high name recognition in a crucial swing state, which potentially is something to consider. And I wonder, to the extent that we've looked now at your new national polling and you've seen some other national polls where there isn't a lot of movement, do you expect what ultimately will matter most, especially within the Biden campaign, with the president himself making a decision as to whether this should continue forward, is more of a deterioration in those swing state polls, even if you're not seeing nationally that much of a difference?
Yeah, national poll is good in quick turnaround to see what's going on. It's a thermometer, directionally speaking. But really, the swing states will matter. And so we're going to have to wait a bit the next couple of weeks. Ipsos has a swing state poll next week, and we will see. But those will be the critical sort of inputs that I believe would be used to make any sort of decision.
Do you think it's possible that we could be adding to the list of swing states as a result of this debate performance, say the ones Donald Trump has been talking about, like Virginia and Minnesota, which you've suggested is winnable for him?
I think that's possible, but that's really if the dam breaks. Whether it's, is Biden sort of status quo? He didn't gain any ground, but he's not going to lose any ground. Or does he lose ground? We're not quite sure about those two scenarios. If other states are opening up, that means he's losing ground. And he's especially losing ground with those key constituencies that he needs to bring into the fold: Black Americans, Hispanic Americans, younger Americans, and less affluent ones. All I call inflation orphans.
All right. Well, the demographics are certainly important here. Thank you so much to Cliff Young of Ipsos, out with new polling today. We appreciate you sharing it with us. Now, coming up, President Biden today briefed on Hurricane Beryl. This is the White House unveils new policies to address extreme weather. We'll have more on those plans next on Balance of Power on Bloomberg TV and radio.
what's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Balance of Power on Bloomberg TV and radio. A history-making storm is leaving a path of destruction through the Caribbean. President Biden says what's being called Hurricane Beryl is shedding light on the connection between extreme weather events and the impacts of climate change. Bloomberg's Tyler Kendall is at the White House this evening with more. Tyler?
Yeah, hey, Kaylee, this is the first time ever a Category 5 hurricane has formed over the Atlantic. For context, storms of this size don't typically form until the end of August or early September. But we do know that President Biden was briefed on Hurricane Beryl earlier today, and he used the moment to connect extreme weather with his climate change policies.
Extreme weather events drive home the point that I've been saying for so long. Ignoring climate change is deadly and dangerous and irresponsible. These climate-fueled extreme weather events don't just affect people's lives, they also cost money, they hurt the economy, and they have a significant negative psychological effect on people.
You heard the president mention the monetary cost there. Hurricane Beryl is heading towards Jamaica right now. Early estimates are putting potential damages there at $1 billion. The National Oceanic and Atmospheric Administration, or NOAA as you might know it, has found an increase in the intensity of hurricanes like this one linked to warmer waters in the Atlantic. Experts say it's a stark warning ahead of what's predicted to be an active hurricane season. NOAA right now forecasts 8 to 13 hurricanes between now and November when the hurricane season ends. That's considered to be above normal. Now, while the storm is expected to miss the U.S., President Biden says that they are watching this situation and monitoring it closely, and also went on to tout the ways his administration is working to protect Americans right now from extreme weather. That includes one new proposed rule today that, if implemented, would protect an estimated 36 million American workers from injury when it comes to excessive heat on the job. Joe and Kaylee, if implemented, this rule would become the first federal safety statute of its kind.
Brings us to the climate policy, Tyler, in this White House. What's the president saying today about his plans to mitigate climate change, knowing the Supreme Court just essentially overturned the Chevron doctrine this week?
Right, exactly. As you've been covering, climate has become an integral part of President Biden's re-election today. He pointed out how FEMA has worked to secure an additional $1 billion in grants when it comes to helping local communities reeling from natural disasters, and also is talking a lot about these resiliency policies. Those have to do with more things on the local level, such as renewing building codes to make sure that they're up to speed when it comes to erosion and other potential climate impacts. Now, for his part, former President Trump, during the debate last week, hit President Biden on his climate policies. He called it the Green New Scam, and also said that he would work to dismantle some of the regulations that this White House has put into place.
There you have it. Today at the White House, Bloomberg's Tyler Kendall from the North Lawn. We thank you for the update, Tyler. Coming up, we'll look ahead to next week's NATO summit, something the White House is preparing for as well as we speak, and how the alliance will focus on the war in Ukraine. Angela Stent, senior fellow at the Brookings Institution, joins us next on Balance of Power, only on Bloomberg TV and radio.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
Alongside some 50 allies and partners, we'll continue to provide the critical capabilities that Ukraine needs to push back Russian aggression today and to deter Russian aggression tomorrow. And I am proud that the United States will soon announce more than $2.3 billion in new security assistance for Ukraine.
That was U.S. Secretary of Defense Lloyd Austin earlier today at a meeting with Ukraine's Minister of Defense, announcing additional aid coming soon for Ukraine. It comes a week ahead of the NATO summit here in Washington, where the country's ongoing war with Russia is expected to dominate the conversation. Joining us now for a preview is Angela Stent, Senior Fellow at the Brookings Institution and author of Putin's World, Russia Against the West and With the Rest. Angela, welcome to Balance of Power on Bloomberg TV and Radio. Always great to have you. And what an interesting moment to have you as we look ahead to a NATO summit happening next week. It's against a backdrop of questions around the U.S. president's acuity and fitness for office, whether or not he is even going to continue running for a second term. A French president that has been weakened by far-right party victories in Parliament. A UK election that has to happen before these leaders gather. How difficult does this make the moment for the alliance as they try to project unity, and yet so many individually are facing turmoil?
So there's a lot of domestic political turbulence in the United States, in Europe. But the aim of this summit really is to get the 32 members of NATO and 4 Asian allies and then Ukraine and other partners to come and pledge their support for Ukraine against this ongoing war with Russia, which the Russians have really been stepping up recently. There may be a different UK leader at the NATO summit. We don't know that. That's what happened to Winston Churchill after, at the end of World War II. He was defeated, and his successor, a Labour Prime Minister, had to come to the final meeting in Potsdam anyway. And of course, we don't know with the French elections if the far right wins a majority in the French legislature, then French policies towards Ukraine may change. Of course, if Donald Trump wins in the United States in November, then American policy toward Ukraine and Russia will change. But still, I think the allies are determined to put on a show of unity with support for Ukraine and really highlighting the dangers to the European continent that this war presents.
With those potential changes in mind, Angela, it's interesting to see Volodymyr Zelensky appearing alongside Viktor Orban today. Obviously a disruptor in the EU's mission here and not always a friend of President Zelensky. considering his close relationship, Orban's, with Vladimir Putin. I don't know what you think of Zelensky's choice to meet with him, but Orban was there to press Ukraine to consider a ceasefire proposal. I wonder what our NATO allies think of that.
So, Hungary has just taken over the presidency of the European Council. So for the next 6 months, Prime Minister Orban will have quite a lot to say about the agenda for what's going to happen between the European Union and Ukraine. Ukraine has just started accession talks with the European Union. It would very much like these to progress. So even though this is Orban's first visit to Ukraine since the outbreak of the war in 2022, I think practically every other European leader has been to Ukraine. I think it makes sense from Zelensky's point of view to try and have a dialogue with Orban and make sure that Ukraine-EU relations progress over the next 6 months. Now, we know that Prime Minister Orban said that there should be a ceasefire. We know that President Zelensky pushed back against that, but he's trying to smooth the way, I would say, for the next 6 months.
Well, as you, Angela, talk about this idea of Ukraine joining the European Union, there also is the question of Ukraine joining NATO itself. Lloyd Austin, the defense secretary, today described the idea that they should have a bridge to membership. What exactly does that mean? Is there any real prospect of Ukraine joining this alliance in the near to medium term?
Well, I don't think anybody's quite sure what the bridge means. I mean, there's now going to be a new office in Wiesbaden in Germany where there'll be more military support for Ukraine. NATO is sending a civilian representative to Ukraine. I think that's going to be announced next week, who will be advising the Ukrainian government on the kind of reforms they need to undertake to join NATO. But the Biden administration and other allies, including Germany, have said there's no question of Ukraine joining NATO as long as there's a war going on, because that could then get involved NATO members, particularly the United States, could then get involved in a direct conflict with Russia. So even though the Ukrainians would very much have liked to have had a roadmap presented next week of how to take the steps to join NATO, and some of the Central and East European countries in NATO would have favored that too, I think we may hear more about the bridge, but I think no one believes that Ukraine can join NATO as long as this conflict goes on, and it could go on for a long time. And of course, the same is true with the European Union for different reasons. It can take a long time to join the European Union and fill all the conditions that they ask for.
So I guess what I'm hearing from you then, Angela, is this NATO summit is going to be one big photo opportunity.
Well, I mean, it'll be a photo opportunity, but there'll certainly be substance to it, and there will be pledges made, and there'll be discussions about how to constrain what Russia is doing. But the aim is to show that this is the 75th anniversary of the founding of NATO, the most successful alliance really in history, and to show unity with the two new members, Finland and Sweden, attending after Putin, had said that he, years ago, that he didn't want NATO to enlarge. So it's a little bit more. I mean, it's more than a photo opportunity, but we'll have to see what substance comes out of it.
Well, Angela, earlier today, Bloomberg caught up with Julianne Smith, the U.S. ambassador to NATO, who spoke about the war in Ukraine and specifically about China's involvement. This is what she told us.
China takes every effort, every chance it can get to argue that somehow it's a neutral player in this war in Ukraine. But in reality, the PRC is providing a long list of dual-use components, things like machine tools and microelectronics that are enabling Russia to pursue this war of aggression in Ukraine.
So to the point you were making, Angela, about NATO wanting to act to restrain Russia, can Russia really be restrained without restraining China by extension?
Well, it's an excellent question. Secretary Blinken yesterday gave a speech at Brookings where he talked about this again, that China really has to rethink and stop these sales of goods to Russia that enable it to continue the fight, that strengthen its defense industrial base. I think China understands that there could be a prospect of more sanctions on China now for what it's doing. China, as Ambassador Smith said, is certainly not a neutral party in this conflict. And and if it continues to supply Russia, plus, of course, North Korea, which Putin just visited last week and signed a military alliance agreement with, if these countries don't stop providing weapons, artillery, etc., to Russia, then it will be very difficult to see this war wind down.
Angela, a group of House Democrats is urging the Pentagon to begin training more Ukrainian pilots to fly F-16 fighter jets. We're looking ahead in this case many months that it would take, of course, for them to be ready. Will it make a difference?
So the first F-16s are supposed to arrive in Ukraine maybe next week, the week after. The Russians bombed an airfield in Ukraine today where they think the F-16s will arrive. I think it will make a difference. Unfortunately, it takes a long time to train the pilots. They have to have the English language skills for that. Some of them are trained in the United States, somewhere elsewhere. But it will help. Well, the Ukrainians need to combat Russian air power in a way that they really haven't been able to do because they're so vulnerable to it. So hopefully it will make some difference. But I think it's still the Ukrainians in a very difficult military position at the moment. And the most they can do, I think, for the rest of the year is to defend their territory from Russia taking any more of it.
Angela, thanks so much, as always, for being with us. Angela Stent, Senior Fellow at the Brookings Institution, with us on Bloomberg. Coming up, the Biden campaign announcing June fundraising and a big haul, $127 million, with tens of millions of that raised since last week's debate, said to be a disaster. We'll play it to the political panel next on Balance of Power, Bloomberg TV and Radio.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
I've had a lot of conversations about this, candidly, and you know, there's certainly a view that the chaos that would follow would be worse than just having a nominee that we know and that can trust. And then, of course, there's the other view that the debate was a disaster, and we just need to move on. I'm not sure exactly what the right answer is yet here, but I can tell you we are having those serious conversations as any serious party should.
Part of our serious conversation with Democratic Congressman Seth Moulton earlier today here on Bloomberg TV and Radio, talking about the future of President Biden's candidacy. This as the Biden and Trump campaigns release their fundraising numbers from June. This is important considering we had the debate at the end of the month. President Biden announcing a $127 million haul, outscoring the $112 million figure from former President Trump. Important. $38 million of Joe Biden's take came from Thursday on, the night of this so-called disastrous debate. So what's going on here? Our political panel is with us to talk it out. Lisa Camuso-Miller, former RNC Communications Director and host of the Friday Reporter podcast, alongside Matt Bennett, co-founder of Third Way. Matt, I know you've been part of this conversation as well, so I'd like to get into this with you. Some of this is being had publicly now. We have a member of Congress, a representative, Democrat from Texas, calling for Joe Biden to drop out of the race. But it strikes me that more members of the party sound like Seth Moulton, where we have a serious conversation. We have a couple of options here, but we're really not sure